morning, everyone. As the Chief Growth Officer and Senior Member of the Organizing Committee, I am honored and pleased to welcome you all to the inaugural Future Bank Summit Saudi Arabia 2020. I take great pride in welcoming all the delegates, speakers, sponsors, and media partners to this two-day conference that is extremely important and timely for an industry very close to our hearts, the banking and financial sector. This conference goes to the heart of all matters relating to digital transformation of banks, and it will feature highly respected international and regional speakers who will share, discuss, debate, and dissect significant new developments and technological advancements that will impact the future of banks in the region. As we all know, COVID-19 has put regional banks under immense pressure to relook into existing business models and accelerate digital transformation. The shift in consumers' digital experience, adoption of next-gen technologies, transformation of customer service to customer engagement, mobile workforce with the need to right-size the branch network are all an opportunity for regional banks to seize the possibility and go digital first. Future Bank Summit Saudi Arabia will showcase latest innovations and practical case studies along with interactive panel discussions designed to guide the banking sector in identifying the right strategy to knock through long-standing resistance and be future ready. As the organizers, we are very excited for this timely virtual conference discussing the future of financial industry driven by innovation with the adoption of key technologies. The key insights and thought-provoking debates will ignite the ideas to redefine the financial services industry in coming times. On behalf of Verve management, I welcome each one of you and wish you a very successful conference ahead. I'd like to now introduce Mr. Amit Jugnauth. He is the head of IT risk and governance at Lloyds Banking Group. Amit joined Lloyds Banking Group as the head of IT risk and governance in 2019. He began his career in financial services in 1998 and has held a number of risk and compliance roles since. He settled in the work of information security and technology risk in 2007, and he joined Aviva, running several global security projects. In 2015, he joined Direct Line Insurance Group, where he was the head of IT and cyber risk in the first line, leading several transformation initiatives. Amit, the conference is all yours.
Good morning, welcome. Now, I've been told I was possibly on mute, so I'm going to start again, apologies. But good morning, Assalamu alaikum, sabah al khair. My name is Amit Jugnauth. I'm, as Rohan has said, I'm joining you from Lloyds Bank here in the UK in London, and I'd like to welcome you all to Future Bank Summit KSA. Now, I'll be chairing the Congress for the next 2 days. I'll be here the entire time, so more than happy to be joining you for these 2 days. Now, we're really happy to bring you this interesting event to start gearing up to the new normal. During this summit, we'll be discussing what the future of the banking system holds for us in the post-COVID-19 era. As you can probably tell, this is not the Lloyds office. I'm working from home. We're in lockdown here in London, so it's very much adjusting to what a new normal may look like. Now, before we get into the exciting stuff, I'd like to thank all our speakers, sponsors, attendees, providing their time, support, and insight in helping us make this event a benchmark in the industry. Now, we all strongly believe that technology will play a key role post-COVID, and therefore making our industry aware and keeping them updated on the latest technological solutions is of the utmost importance to all of us. Now, my interest, I'm a technologist, I'm a cyber specialist, and very much the topic here today is of professional interest, very much of professional interest. However, I have a big personal vested interest in Saudi Arabia. And that comes from the fact that my wife is actually Saudi. My daughter was born at the United Doctors Hospital in Jeddah. So as a family, we take a big interest in what's happening in Saudi Arabia. So when the opportunity came to join you today, it was perfect. My professional interest with my personal interest brought together. I've been a regular visitor to Saudi Arabia for coming up to 10 years now. And there are a few things that I think are really, really relevant when we talk about the post-COVID-19 era when it comes to technology. The first thing for me is Saudi Arabians are technology savvy. It's very much part of the things that people use day to day. My mother-in-law, who ordinarily you'd expect to not be technology savvy, does everything on her phone, everything. books train tickets, orders food. She is a regular user of technology. The Saudi community knows how to use technology. You also have some very good infrastructure in Saudi Arabia. I've mentioned I've been a regular visitor for coming up to 10 years. I recall processing my Iqama application and expecting it to be a paper process. And actually, I was able to go to Red Sea Mall in Jeddah to process some of the parts of my my application. Again, very surprising, very easy based on technology. There were also parts of that process that were paper driven. I remember queuing up at the Jawazat and for a good hour or so for someone to stamp a paper, for me to then take that paper to another office, for them to stamp the paper, for me to bring it back, but then I could pay online. So there's a real mixture. There's a real mixture of technological advancement, but also great opportunities to use technology to become more efficient. The one thing I have noticed myself personally in Saudi Arabia, the one constant over the last 10 years for me has been an appetite for change. And when I talk about change in a technology sense, for me, it's very comparable to the change that's occurring in Saudi Arabia. We're very close as a family to Vision 2030. It's something we follow with avid interest. Saudi Arabia is good at change. And I think the opportunities that not only COVID present, but technology present. I mean, Saudi Arabia is ripe for an evolution in the technology space in banking. So some of the things we're going to talk today about how Saudi Arabia can really capitalize on those opportunities and accelerate forward. To give you an idea of the things we'll talk about in terms of the future of banking in a post-COVID-19 era, future of biometric technology, banking on cloud, AI in banking, nexus of retail banking, the relevance of cybersecurity in today's new normal. That'll be a very particular interest of mine. Insights, strategies, and behavior post-COVID-19. Once again, thank you to our esteemed speakers who've taken their time out of their very busy schedules to be here with us today and given us insights on how we move forward successfully. Now, a few announcements before we start, so we get some logistics out of the way. Best things first, all the attendees who record a full day of attendance will receive a guaranteed prize from the organisers. So all attendees who remain from 10 a.m. to 12:30 p.m. KSA time, and 10 a.m. to 12:30 p.m. tomorrow will receive a prize. So definitely look out for that. All of your activities in the Hubilo platform have points assigned to them. So your activity like meeting people, sending a meeting request, visiting booths, etc., give you points. At the end of tomorrow, the top 3 on the leaderboard will receive a prize. So very generous hosts we have here for the next 2 days. Now you can visit our sponsors and partners under the sponsors and partners tab by clicking their name. You'll be able to speak to their representatives and access their brochures and so on. Each session will be followed by a 5-minute Q&A. In case you have questions for our Q&A tab that appear on the right-hand side of the screen, and if the questions are for a specific speaker, please mention speaker's name before your question. You can write about the event or anything about the industry in the event feed and communicate with fellow attendees. And I'd urge that because actually the peer exchange is really valuable in these events. And a networking zone, you'll be able to communicate with your fellow attendees. Make contacts, connect, introduce yourself. Quite often we can make really valuable connections in these events that stay connected for many years after a 2-day event. At the end of the sessions today, we'll have all the speakers available for 30 minutes to answer any unanswered questions, which can then be addressed. Right, without taking up too much time, first I would like to introduce our first speaker. So Shemek Bogush. So Shemek, I hope I pronounced your name correctly there. Apologies if I haven't. But Shemek Bogush is currently leading the financial services division of Comarch in the Middle East and Africa region. Graduate of 3 European universities with over 10 years experience gained on IT projects from the US through Europe to the Middle East. Presenting on how to win SMEs in the fintech area. Shemek, over to you.
Great. Thank you very much, Amit, for the introduction. And that was excellent pronunciation. I know that some of Polish names could be a tongue twister, but you did an awesome job on that. Thank you very much for inviting me here. It's great pleasure to actually be on the event. And definitely it is a challenging times where We're all joining probably from our offices or either from our living rooms, but it's still great that we are able to come here and share our insights into where the banks is heading and on the digital transformation. Like Amit said, my name is Przemek Bogusz. I'm located in the Middle East area for the last 6 years, living in Dubai. And I'm meeting very often with the banks. That gives me quite a good understanding what banks in Middle East are looking for and what is their roadmap for their digital transformation. And I would like to share today a bit of my insight to SME banking world, or just to tell you how to win SMEs in the fintech era. And hopefully you're able to see right now my screen. I would like to tell you a little bit on the SME banking, because small and medium enterprises, it's a segment of clients that can be considered as quite problematic. Many of the actually banks consider that as unprofitable or costly to serve, and rather it's obliged to service than try to find this attractive business on its own. And it could be very easily explained when we look at the structure of the bank, where from one side we have the retail banking segment. They're having usually the products that are quite easy to serve, the services easily to serve, but the volume of the customer or the mass effects is bringing a very considerate revenues to the bank. Therefore, the banks very often chase this kind of segment of the customers. On the other side of spectrum, we have the corporate banking customers that have completely other set of requirements. They have very sophisticated, very complex products and services they require. Therefore, it's a big amount of attention required for them, but it's quite lucrative revenues and it's bringing very good ratio of cost to serve to revenues. And somewhere in between, we have a small and medium enterprises. And the ratio here of cost to serve to revenues doesn't fall that well, because they are still demanding quite a lot of different set of functionalities, and the revenues that are coming cannot be considered as lucrative as corporate banking. Therefore, those customers are very often considered as a low priority client. And while actually the sufficient funding is one of the most important ingredients to actually make those enterprises thrive, the Middle East is showing that they're having quite poor support into that, and the largest gap in the world actually in the financial inclusion for the SMEs. So when the SMEs cannot find the support in the banks, they're very often going to the private investors, but usually meeting goes for months. And right now, especially when the times are difficult with COVID, the face-to-face meetings are not possible. So to get the private investors, it's not that easy, and very often finish with the dead end. And it might be quite surprised as well why those SMEs are treated so low and they're underserved. Because if you look at the Saudi Arabia market, we can see that actually 99% of private sector companies are SMEs, although they generate and contribute around 20% of the nation GDP, which is quite low comparing by size and volume to the local or world peers. For example, the GDP coming from the SMEs worldwide is on the average of 45%, and just in UAE, it's around 53%. But there are very positive hopes, and there's a lot of actions being taken right now. A great deal of resources have been actually dedicated to small and medium enterprises in Saudi Arabia. So under the vision of 2030, we see that there is a big plan of increased SME contribution to the GDP from around 20% that it's standing right now to 35% in the next 10 years. SMEs are expected to play a vital role in diversifying the economy away from the oil and to provide actually employment for the younger Saudi generation. Okay, so with this kind of positive feel for the SMEs, we can consider, okay, what SMEs are actually looking for. And definitely it will change based on the type of a business they're leading, and they might have a big portfolio variety of demands, but some of them are quite common for all of them, like accounting, payroll payments, seeking financing, so important for the SMEs, as well marketing their products or cybersecurity. But probably the most clear and one of the most obvious reasons is actually that they have very large appetite for digital services. This is often a tech-savvy companies with younger generation that they want to be able to conduct all of their business in the digital channels to be served online completely. Unfortunately, only about 1/3 of the customers in SME feels that their bank is able to understand their small business. This is the global data, and the bank is actually not exactly the place where they try to get the support. So where else they can go? Of course, they'll tour into the Google. They type the services they might be requiring, and they just find within a second hundreds or thousands of results about the fintechs, crowdfunding, or peer-to-peer lending companies that are already supporting them. Many of them actually already existing in Middle East, which is very good news for SMEs. So for crowdfunding, we have Eureka, for example, or peer-to-peer lending, Beehive. And it's right now up to the banks what kind of choice they would like to take, because we are in the crossroad where we can take two main roads. The banks can either do nothing and let fintechs take over big part of SME business, and then they will concentrate on the corporations, or they can try to support SMEs and tap into the segment and figure out what's the best way to do it. Some of the banks in the Middle East already have taken this path, like Emirates NBD or Mashreq Bank. And I wanted to tell you 3 tips on how to win SMEs in the fintech era. First, become more open, design for the future. So it's important to build applications that are open platforms rather than closed solution. And let me give you an example how this can work. So we can imagine the customer is looking for coffee. In the example of closed solution, we can bring an entire solution into the vending machine that makes a nice coffee, and the results is quite obvious over here. From the perspective of open platform, we can build it from the single components. We take water and necessary electricity, add it to the kettle, add some coffee beans, and we have very similar effect of coffee. The problem appears when the customer finally changes his mind and he wants to have tea now. So we have a problem with vending machine. We either need to replace it for a new one, or we need to ask the vendor to make some changes that neither can be cheap or fast. Where in the open platform, we can just change one of the components, and that will change the entire result. In the banking world, this could look like that. We want to make some foreign transfer. We get the FX rate, we get fee amounts from the external systems. We digest it through our online banking system, go through approve and release, and then we send it to a SWIFT network for sending the transfer. But what if you want to change parameters of the transfer? For example, we want to have it faster or in the different fees. Well, we can just change one of the components, for example, for Ripple, and the result will be completely else in this case. Having this in mind, we need to really think about designing the application that will be very easily adjustable in the concept of how they look inside, how we can change single components and modules, but as well how to provide those APIs to be able to join the external systems. So many of the fintechs can already have a technology that is good and is working very well. We can just provide the APIs that they can join any moment. Second tip is to become more available. The access to websites went much higher in mobile devices in last year than any other digital channels. So it means that actually mobile have become the first device to be used globally. And we especially need to think about those SMEs that this is their new office. The smartphone or the tablet is the place where they will do most of the business, being on the run or leading the business. Therefore, we need to design the applications having the most important financial data very easily accessible from the palm of their hands, to be able to entry, review, approve different transactions just through the mobile phone, and focus on the out of the business banking, having of course notifications and number of functionalities existing there. So we start with the mobile device, go to tablet, and then of course for the complementation we can have the web access through the normal online channels through laptop, but this is something for more as a complement being in the office than a first focus. And there is a number of banks that are already actually going purely mobile, and they are very successful banks with a number of millions of customers using them. The third tip is to become more intuitive, because it's not a case to actually provide all of the products and services, but they will be so entangled and complicated to provide to the customer that they will get lost and will struggle to have it. We need to provide to customers kind of friction experience, to provide them this kind of easy to navigate through application experience and easy to finish particular tasks. So if there's some products, we really need to let the customer journey flow so easy that the customer will feel that it doesn't bring any kind of hassle. And how this can be done? Well, it usually requires years of work to bring this kind of perfect user experience. We need to do a lot of testing. And after many of the iterations, we are able to actually find the proposition that will be leading the fastest effects to our clients. And it's very often considered that if the customer doesn't know how to go through the application or make mistakes, it's not his actual mistakes, it's the mistakes of the design that we need to change. And a few of the examples of how we can support this optimization in the user experience could be, for example, contextual tips. So we can imagine a situation where the SME is having some pending transactions, but the account balance is not sufficient to fulfill it all. Therefore, the application can pop up instantly information or alert that there is insufficient funds and to go for additional funding. Within one click, we are already in the process of making a landing, and we are going to start from there. Across the application, there could be as well a Google-like search engine where typing literally a few letters can give us instantly results of something that we are most probably looking for, because it's checking through all of the fields that are available in the system and providing for this particular user based on previous history what he is probably looking for. Similar case works with the data autocomplete. To speed up the data entry, the system already understands the user history and knows that which kind of transactions, account, or different type of data was looked for before, and providing this kind of information at first and autocomplete all of the fields in the application. So a win-win strategy, actually, in 3 simple steps to summarize it. We need to become more open. We build applications that are very easily adjustable, and when the business grows, we can quickly extend or adjust the platform. We need to think as the mobile first, as this is the device that the clients is always having with them and they can access it. And the last of all, it's become more intuitive. Focus on user experience and accessibility of the products and how easy to get to them. I would like to tell you as well a few words about the company that I'm working for last years in Middle East. And I can tell you we are having right now presence in Dubai for last 20 years with offices there, and as well we have offices in Saudi Arabia. And we are having actually over 100 banks that we cooperate currently around the globe in last 20 years. And this gives us a quite good understanding, not only to the SME banking characters that we are having, but as well of number of different requirements, digital paths, and how the banks plans for the future. How we build it, we very often do user experience improvements. We add new modules and new features that can be changed, added, or erased any moment. And we work on the technological improvements. And this is all based on our clients' requirements, other banks' existing requirements, what are our competition providing, and what are the market trends and regulations. And this put all into action, provide us the idea how the banks are looking to digitalize their products. And many of them we are able to provide, and we are providing for the last 20 years, not only SME banking, but as well platforms as corporate banking, loan origination, digital insurance, wealth and asset management, and a few others. And I'll be definitely glad to tell you more about that and about the SME banking. So I'll invite you to visit our booth, our virtual booth of Comarch, and I'll be glad to answer some questions and to tell you more about those products. Thank you.
Thank you very much. Very, very interesting presentation now. And actually, as a few of the fintechs you flashed up, there are some of our big competitors here in the UK, and for sure their services are quite unique. And you know, we learn from them as Lloyds is the UK's largest retail bank. We've been in existence for almost 300 years. And we've got used to offering services that we deem appropriate. One of the big shifts we're seeing with the fintech community is they offer services that customers can tailor to themselves, which is actually quite a game changer for us. And it's very much consistent with what we see in terms of customers using technology for their own use and making it work for them. So it's a big thing for us to think about. So some very interesting concepts you've presented there. Now, I've just had a look to see if we've got any questions. I can't see any questions that have come through so far, but I think like I mentioned earlier, we have an opportunity towards the end of the day. If there's any questions that come up and you'd like to ask, please feel free to do that at that time. But really, thank you. Very interesting presentation. Like I said, very relevant to some of the challenges that we're finding we're having to deal with today. What I will do, if we move on, but please do, if you do have any questions, put them in the Q&A chat, and we'll come onto them in the Q&A session at the end of the day. But thank you, Shemek. Very, very interesting. Very interesting.
Thank you.
Great. So look, now we have the first set of our expert panelists to discuss the future of banking, stemming the impact of COVID-19 on the economy. Something that crosses borders. Every country I can think of at the moment is having to deal with this in some shape or form. So a very, very relevant topic. It's certainly a hot topic here in the UK, and I'm sure, and I know it is in Saudi Arabia as well. So I'd like to introduce Hani Garg. Hani, if I've mispronounced your name at all, apologies. But Hani is the country head for Saudi Arabia at SWIFT, and Hani will be moderating this panel. Hani Garg is like I mentioned, the country head for Kingdom of Saudi Arabia at SWIFT. Hani has over 22 years of professional experience working for organizations like SWIFT, Standard Chartered, ABN AMRO, ICICI Bank, and HDFC Bank in transaction banking, corporate and commercial banking roles across the Middle East, North Africa, and South Asia. So I think this is going to be a very interesting panel. And Hani, over to you.
Thank you very much. If someone can, from the admin panel, enable my video, because it is not allowing me to start. Okay, there we go. Well, thank you very much, and thank you everybody for joining. I have been introduced already, but just to give you a background about where I am today. So I currently work for SWIFT, which is a global cooperative of banks, and we manage the financial messaging for global banking community. We also have 2,000 corporates connected to SWIFT network who use us to communicate with their banks all over the world. And we are currently focused on bringing cross-border payments into the new era, where we believe that cross-border payments should be as frictionless and as fast and cheap as local payments, domestic payments. And one of the major projects we are leading with the community is a migration to ISO 20022 for the whole community globally, banking community globally. And we will be doing the same in the Middle East and Saudi Arabia in the next 2 years to come. I have with me a wonderful panel of very experienced digital professionals. That I'll do quick round of introduction and let them do theirs. Grant Niven from BSF, Abdulaziz Al Damash from Saab, and Steve Monaghan from Riyadh Bank. Gentlemen, if you could quickly introduce yourself, and then we move on with the panel. Steve?
Thanks, Hani. I guess I'll kick off.
Sure.
All right. Okay. Hi, everyone. So Grant, sitting in Riyadh just now. Pleasure to be here. I lead the group digital function for Bank Saudi Fransi. A very interesting role just now. Very delighted to be here for the panel debate. Ultimately, I'm responsible for the group-wide digital strategy and the execution of that, and also leading a number of digital ventures that we're looking to launch into the market as we go into 2021. Prior to that, I've had a varied career over the last 20 odd years. Started in the software industry, worked for various different global SIs and outsourcers, delivering projects in the banking sector predominantly across Europe, and then found myself back in 2013 joining EY in the region, where I ultimately led our consulting practice for technology and digital in the financial services sector. So exciting times, lots of experience around digital banking, to the debate with Steve and the team. Steve, over to you.
Great, thanks, Grant. Steve Monahan, I'm currently Chief Digital Officer at Riyadh Bank, and previously I've run the innovation, set up the innovation teams at DBS Bank in Singapore, AIA Insurance in Hong Kong, and I'm an investor in a whole bunch of things around fintech. Look forward to further discussion on the panel. Thanks.
Huni, we can't hear you right now. Can you please try to turn off your mute and turn the sound on?
Apologies. I was looking for Abdul Aziz Al Damash from Saab because he was definitely on the dry run platform in the morning.
Yes, he's joining us in a moment. He was stuck somewhere, so he'll be joining us in a couple of minutes.
No problem. So today our subject is a very interesting one and a very relevant one, considering we are right in the middle of a massive pandemic that we have seen in the last 100 years. And the way we live our lives and the way our customers live our lives have changed quite literally. Whether it is the way we communicate, the way we shop online, the way we interact with other people, or the way we bank. So this has had an impact on almost all aspects of life. And we have gone through the lockdowns, we have gone through the unlocks. But what does the future hold for us? How did we respond to it? I think it's an interesting point to be considered. So first, I would like to ask my panelists, starting with Steve, were you ready when the lockdown happened? And you do have, digitization is not something new. You're a very experienced professional. So is Riyadh Bank. When the lockdown really happened and the pandemic was at its early peak, how did you respond? Were you ready? Was the legacy infrastructure in any way a hindrance for you?
I think a famous philosopher by the name of Mike Tyson said it best. Everyone has a plan until they're punched in the face. And Corona was a little bit of a punch in the face. But that being said, I think that having been through crises in multiple banks, multiple jurisdictions, it's an opportunity if you move fast. So, the whole role of technology is to arbitrage time. So if you're effective in using technology and move quickly, you can generally carve out a market advantage. And that's what I set out to do the moment that the crisis became apparent and we started getting locked down in Saudi. I think the first thing that we focused on was really the customer. What we realized is that a significant amount of the SME business was very rapidly shut down and then had zero income for quite some period of time. So thoughts immediately went to data, trying to work out, basically where everything sat across the country, where the opportunities were, how could we help our customers restart their businesses, things that banks usually don't do. We started to look at how to do it. It became more about them than us. If we solve their problem, they solve our problem. So that was kind of the first focus. Then, of course, that layered back into the infrastructure, into applications, really focusing on customer experience, all that sort of thing. But really, and the results as we've gone through it, I think have been quite significant and are public knowledge. And that's all I can reveal. But it was an opportunity, and I think that what it really brought out was that resilience, which the bank is known for, and that focus on the customer, which is incredibly important at these times.
Grant, how was your experience?
I fully concur with Steve's comment about a punch in the face. I think for the all industries, it was a big shock to the system, in particular the banking sector, where we're very heavily reliant still on the branch. I think just to echo some of the thoughts there from Steve, the regulator in the kingdom was rightly so very demanding of the banking sector in terms of stepping up to support not only the retail clients but the broader corporate, in particular the micro and SME segment. The number of mandates that came out from SAMA over the COVID period was significant. I think a big thing that was needed in any organization was the culture. Certainly in BSF was there to really do what was needed to make it happen. A lot of people were working a lot of hours. I think a lot of our leadership team in particular didn't leave the office for several weeks when things really locked down. But ultimately, I think what was very refreshing was the infrastructure that's in place in the banking sector is robust, and that was seen globally, but also within the kingdom in particular. So the financial system, the payment infrastructure, everything kept running. The shift to remote was something that we had to move very fast in. So typically, a lot of bank staff are working in headquarters and regional offices. But actually getting people to be able to work remotely, securely and effectively was something that the IT teams need to move very fast with. But I think ultimately what it's taught us is actually the extreme events create the catalyst to do a lot more. So one thing that has led from the COVID event is an acceleration across the industry, in particular with our bank, of the digital ambition. To be a leader, you have to be a digital go-to bank, and that's very much at the forefront of what we're doing now. So big investments have been made already, but even more significant investments have been made across the whole bank going into the next couple of years to make sure that we really change. We're not going to go back to the way we were.
Abdulaziz, welcome to the discussion. So we just got started, and we were talking about the lockdown, and then the level of readiness and the first experience of going totally digital from a physical experience for customers as well as staff. How was it for you?
Thanks for having me, and I apologize for this technical issue which led to some delays. I think we went through a very difficult time and precedent events that happened that wasn't planned. But the good thing that the maturity of the digital across the industry and in our banks app in particular helped to ensure that the business continuity are there, customers are not being impacted, and business as usual was moving without major impact. It wasn't an easy thing, so we were trying different things as individuals, as organizations, or even the government. But generally speaking, I think the government, they made a very significant steps that helped to reduce the impact socially, financially, and even individual or in corporate level. From our perspective, what we have seen, there was a very good shift in terms of moving towards digital and adoption of digital from customers. This was the pandemic helped customers to increase their adoption and accelerate the adoption of the digital services. Also, the changes in some of the regulations that SAMA was led by SAMA helped to incentivize customers to move faster to digital channels.
So one of the things which is coming out very clearly when you look at most of the surveys, that the adoption for digital in almost every industry went up significantly, including banking industry, whether it is the usage of front-end channels or payments or any of the banking services. When customers look at it, they see a fully digital front end, but are the banks really ready with a fully digital back end? The gap between what happens internally as far as digital experience is concerned versus what is seen by the customer could be the difference between a highly resilient performance of a digital bank compared to something more of a clunky experience for the client. So how do you see, Grant, if I could come to you, how do you see that evolving with this with background of pandemic and heavily investments heavily focused on digitization now? Do you see that changing?
Yeah, look, I think ultimately this is a journey, right? I think what happened in the last 8 months highlighted a lot of pressure points in all the banks in terms of their infrastructure. That was also the case for BSF. But it's as I said, it's been an accelerant to making sure that we've got a number of things in place. So I think ultimately to have the front end is obviously one part of the jigsaw puzzle in terms of our digital interfaces and a great customer experience. But there's a huge amount needed across the banking sector around putting in place digital architecture, and that's a major focus for us as a bank. So we've got a modular architecture that allows us to adopt not only technology, but also to collaborate and really truly be part of an ecosystem and embrace open banking, which is going to come in the kingdom in the near future. The journey to cloud is something that the kingdom has been behind on from a compliance and regulatory perspective, but we're starting to move fast, and that's something that the industry will significantly benefit from in terms of speed to market. So embracing cloud is something that's key to our strategy, but also will be for the banking sector as a whole. I think also what was highlighted is the digital skills gap. So skills are finite still in the kingdom and the market as a whole, the region. And certainly for us, finding a way to address that gap has been a major focus, and bringing in the right talent, both internally but externally. Data is key. Having the right data infrastructure in place is the lifeblood of any leading digital organization. And again, bring data as service to our business units. So there's a lot happening. But I think the key thing as well, which for me also is a key part of our strategy, is making sure that we also, where possible, we launched digital ventures that allows us to accelerate fast. So whilst we're kind of doing the plumbing, getting the infrastructure ready of the kind of main universal bank, we can also go to market quicker around new ventures that leverage where we can, but allows us to move fast, adopting a lot of the new technology that's been embraced across other digital industries. So it's a dual-pronged strategy that we're using, but a lot to do, but still a lot has been achieved so far. So it's certainly interesting times. We're not short of work.
And Steve, if I were to come to you and ask you whether you agree with those fundamental pillars that are required for a fully digital bank, anything you would like to add to that?
Yeah, I'll just pick up on the point. I think Grant's appraisal is pretty good. And I've worked for tech companies and insurance companies and banks. I don't think anyone's ever happy with their infrastructure when a crisis hits. But that being said, the speed at which you respond is really the differentiating factor. And the sole purpose of technology is to arbitrage time. So how you apply technology to arbitrage that time becomes very important. But if I look at the fundamentals, I think it really comes down to an emerging architecture that's really just pretty much A, B, C, D. So A for artificial intelligence and automation, B for blockchain, C for cloud, and D for the whole data piece, right? So data and digital delivery. So I think it's interesting times, and I think that architecture is always going to continue to emerge. I don't think it ever stops. And every time you think you're nearing what you believe to be an objective, that objective in digital shifts quite dramatically as we continue to collapse value chains. So that would be my quick add to Grant's core points. One final thing, I think that one of the benefits we had in Saudi Arabia was summer. I think summer responded incredibly quickly to the crisis and with good leadership, and that I think that their vision for where things are going forward in the kingdom really paints for a very positive future.
So Abdulaziz, if I could come to you and ask you the same question, and also a little bit more about the regulation that as regulators, how they helped the community in Saudi Arabia to move on with the digitization agenda during the pandemic, especially. Yeah, thanks for that. I think if you look at Saudi Arabia, it was one of among the first countries to implement early and unprecedented precautionary measures to prevent the spread of the COVID and minimize its economic, social, and financial impact. So Sam, I think they've done a couple of programs. I would probably summarize this into three major points. The first one, they announced a stimulus package, including 50 billion Saudi riyal to support impacted individual and SMEs. One of their first most important program was the deferral payment, which aims to reduce the potential impact of the decrease in the cash flow that SMEs may face by delaying the payment of obligations for a period of 6 months with no additional cost. The initial allocation of this was 30 billion, but reached, as per the SAMA Deputy Governor, to 77 billion and covered more than 87,000 contracts. Second part of their monetary policy, they have introduced a number of initiatives targeting those who are high during the COVID, and therefore asking banks for a qualitative measures such as waiver of fees on digital transactions for individual, including local and international transactions, waiver of point of sale and e-commerce transaction on merchants, introducing flexibility of repayment for consumer financing to individuals.
The last most important point is the changes in the regulations. So they played them in part of their monetary policy, the stimulus package, and changes in the regulations. So the changes, significant changes that happen. Firstly, they increase the ticket transactions for contactless and payments, reduce the in-person contacts for individual transactions when they communicate with merchants. And the second was the enablement or allowing banks to use digital signature instead of foot signature to introduce online credit facility, i.e. the personal loan and credit card. And talking about that, what we have seen year to date in August, the Kingdom has superseded UK in the market when it comes to contactless transactions. So the Kingdom, the contactless transaction represent 85% of total transactions, while in UK was 65%. And that means that the adoption of technology in this country is remarkable and very significant.
So, you know, we are in a week when G20 is happening in Saudi Arabia under the chairmanship of Saudi Arabia, and one of the key priorities for Saudi Arabia, for G20 finance ministers and the central banks, is to really improve the level of service in cross-border payments. They want to make sure that cross-border payments have less friction, are cheaper, are faster, and that's something very close to what we do at SWIFT. At the same time, with the kind of population we have in the region in Saudi Arabia, UAE, and many of the GCC countries, there is a large expat population, and there is a huge amount of demand for low-value cross-border payments, which is still very clunky, if I could use the same term again. Takes time, it's expensive, and the digital access to those services is still pretty limited. So how do you see that evolving in the next few years? Now with everybody getting very comfortable with using a mobile for more than half the things they do in a day, how do you see the evolution there and the demand coming up for that?
Well, I think, generally speaking, with the globalization, we saw people moving around from country to country, working and trying to support back their family. So the cross-border payments is becoming crucial, important. And normally customers or individuals look at three major things: the speed of transactions, the competitive pricing, and the third, the most important, is the transparency. When that amount will be reached, where is it stuck, and so on. So as you mentioned, it was part of the G20 subject, and there was a paper that with some recommendations. The aim of that subject was how can we, as G20 countries, reduce the cost of cross-border transactions so that help the business to grow. Generally, if we're talking about the current model existing, which is cross-border transactions built or relying on corresponding banks, this is quite complex, and changes will normally take a sizable amount and investment due to multiple stakeholders, which created an opportunity for some fintech to play a part by introducing innovative solutions and new business models similar to TransferWise. What we believe that will happen in the near future, we will see more new models, more innovative, built in digital. And the recent move that was announced yesterday from STC Pay with Western Union just proved that even those big worldwide and global players, they start thinking differently of the way approaching this lucrative business.
Steve, do you agree with that assessment? What do you see needs to change, and what is the trend there?
Look, I think the world's going real time. So banking's moving from reconciliation business to a real time business, and in time it'll become a predictive business. But what I think you'll see a natural progression towards that in terms of providers, and that'll have a cost impact, of course. But I think what we really need to focus on is time and appreciating the time and the value and how that actually changes the fundamental business model of banking. So I've seen initiatives that go well beyond just the movement of money to looking at how you optimize value for customers at both ends of those transactions, which makes it very, very interesting.
Okay. Now, we have a few questions. While I ask the admins to share the questions with me, I would like to ask Grant. Now we are possibly at the beginning of the end, if I'm being very optimistic, at the beginning of the end of the pandemic, especially in the market we are, I believe we will have the access to vaccines and the treatments that are in progress. And hopefully by the same time next year, we are completely out of it, or at least not as scared of it as we are today. Where do you see, with all that has happened in the last 10 months, where do you see the journey going forward? What are the 3 things that customers will see differently, or the banks will see differently? You could take either side, as far as digitization is concerned going forward.
Yeah, well, I think the big opportunity is for the banking sector to embrace what's happened and keep the momentum. So I think that's number 1 for me, is boards and leadership teams, investors in the banking sector continue to back the journey that we're on, because we've certainly we've had a shock and behaviors have changed. So I think that's number 1, is there's going to be, if you're not digital first as a bank, you're going to be left behind, and that's ultimately the major shift change that's happened, certainly in this region. I think there's a clear kind of steer now that there's certain softer things that are needed to make that happen. We're a big believer in BSF around culture eats strategy for breakfast. It's ultimately the culture of organizations needs to change in order to really enable this journey we're on, and that was certainly seen in the resolution to lots of issues, but now it's kind of shifting the culture again to kind of embracing changes to the way we do things. So those that succeed will put the customer at the center of everything they do. They'll embed design thinking in their organization. They'll work in different ways beyond the traditional ways they've done before. And I think embracing new technology, as Steve pointed out, the journeys, new technology will continue to evolve. Architectures will continue to kind of test organization. But you need to kind of just really work on a kind of really a proactive plan to address it. Open banking, the last point I want to make, I believe is a huge opportunity for the kingdom. And when SAMA already are embracing that, but that's something again which will allow for better, more enriched services beyond traditional banking, that the banks can actually collaborate with and systems. So I think that's the next that's coming around how can banks go beyond providing traditional services and lending and collaborate more effectively with fintech and the startup community. And I think that's the next big wave I'm looking forward to. It's going to be an exciting time.
So that's a really good answer, but there is one in the audience asking you and Steve. Steve, you have a response for this, but how do you manage, given the archaic restrictions, the dichotomy of legacy versus digital cadence while navigating through the credit risk, compliance, and legal formalities labyrinth? I like the word labyrinth used. All risks, how do you improve your pace of digitization and manage the balance?
Well, I think firstly, I'll point out that collaboration around regulation is imperative, and I think SAMA has already, put that center of plate. So it's less about a monologue and more a dialogue about how you grow and create that environment as inside the kingdom. The second piece is that I think I'll slightly diverge from Grant, so forgive me, but I'm right there with Google. I think the world's moving to an AI first model, and I think that digital is just the connections and the piping. It's the value of what you do with it that becomes really important. Mm-hmm. So I think that as you start looking and working with the regulator and working with RegTech, et cetera, and then looking at how you create a new model, I think you're starting to see with open banking, banking as a service, marketplace banking, et cetera, you're starting to see the movement from relationship banking to machine, and that's a fundamental shift for the industry. And that machine to machine is not going to be driven by people; it's going to be driven by AI. So I think it's incredibly important that we start assessing and looking at models in that method to look at how we leverage the strengths of banking, the regulation, the risk management, understanding how financial markets work, et cetera, and start empowering our customers with that information, taking the data from inside out, and that's where it's most powerful.
Okay, so there is a question on payments. I think Abdulaziz has already addressed that possibly. I'll ask him another question. So what is your advice to startups who are trying to partner with big banks? Now you head payments and digital for Saab. If some fintech wants to tie up with you, Abdulaziz, what advice would you give them?
This is a very good question. I think, especially now, the government, they have opened up the market and starting to promote the fintech working with big banks. The challenges we found in the past that the banks are, from risk perspective, they're quite cautious and they take a very calculated risks when it comes to business, while some fintechs, they are quite ambitious in their plans and they try to take more risks. So the advice is that I would give, firstly, try to create a value for customer or for the bank. Normally the bank, they will look at what you will offer, what is it for me and what's it for the customers. If it's something you are repeating what the banks are doing, it's unlikely that the banks will work with this fintech. Secondly, I think talking to the right people within the bank. Banks are very big organizations. If you select the right people to talk to them, and they can help you internally to spread that message and support your proposal. Normally that would take the right path, and it might go in to the right direction. Thirdly, banks by nature, it takes time to get some approvals because that's the nature of banks. It has to go through a different level of approvals, committees, whatever. So they need to be patient with the banks and convincing them about the ideas, about the approach, then taking some time with them to show them the value that they will create. Thirdly, most important is trying to find a common ground between what they are trying to offer and what the banks are looking forward. The risk base is important. The compliance banks are extremely to them is important, and they don't take any risks towards that for evaluation or evaluation of compliance rules and regulations. And those are probably the 4 points or advice that I would give to fintech.
Okay, so I'm going to sneak in one last question, and this is possibly very relevant. It's easier to do business cross-border and globally in any other industry if you're totally digital. Take for example retail, take for example electronics, even automobiles. Tesla has no more showrooms in many of the countries. You book it online and it arrives at your doorstep. So what about banking? Is it easier to expand banking regionally or globally once you're heavily digital first or digital only compared to the legacy models? How do you see the future? Grant and Steve, if you could cover to that, please.
Yeah, look, Honey, I think ultimately, if you develop the right brand and you've got the right infrastructure in place, you can do this anywhere. I think the relevance of digital first banking propositions often needs specific markets. So we obviously have to deal with the regulatory side. That's one factor that needs to be thought about. But ultimately, I'm a big believer in build the right proposition that is highly engaging with customers. And you can roll that out across multiple markets, and it can be a fully digital experience. So the days of having wet signature and having to go to your bank branch are over, in my view. Ultimately, those that are still doing that will not survive. So those propositions, certainly in the retail space, can be cross-transferable, and we indeed find that in the future, longer term. The corporate business, those complications are not insurmountable. You can find the way forward. And I think that's the next big challenge that we've got is how do we actually cross-fertilize and provide these services in other markets? And again, it's something that we need to tackle as a banking industry. I'd say we're behind other industries. Your example of Tesla is a very relevant one. They've built a business which is designed around the customer, and we need to learn from that.
Steve, 30 seconds for you.
I think that we're going to be a little bit different to your Teslas. I don't think global brands have worked for banking in the past. I used to work for Citi that was in 103 countries. But what you're going to see is networks of partnerships because you're all digital, and that interconnectivity is going to become much, much easier. And then you're just really restricted by a regulatory process in each of the markets. So I think the future is all about networks and partnerships.
Okay, thank you very much. So with that, I would like to, Abdul Aziz, you want to come in? Please feel free.
Yeah, thank you for that. Just three major, probably three points as a closing remarks. I think what happened in the pandemic has taught all of us a lot of things, and just confirmed that the investment in digital is the right thing forward. Three things that we have learned. Firstly, digital transformation journey has to continue with the banks, and they need to accelerate. Secondly, the new ways of working has just proven that working remotely can help banks and businesses to continue their work without the need to come into the offices, and we will see probably that changes in the future. Thirdly, there are some enablers that banks has to focus on. Mainly, it's about data, partnership with third parties like fintech or big tech, and thirdly, and most importantly, is the cloud technology.
Well, thank you very much, Abdulaziz. I absolutely agree. So with that, we will like to conclude by saying that we agree that digital first is the reality in the future. Regulatory role is very important in enabling the digital future of banking, not in KSA but everywhere else. And the fact that post-pandemic world, the opportunities that digitization is bringing and the adoption rates are massive, and we will see this growing faster than ever before possibly. So with that, thank you very much, gentlemen. Excellent inputs. If anybody wants to get in touch with any of us, we most likely will be available on respective booths, and the contact details are available in the network. Thank you very much.
Thank you.
Thank you.
Thank you, everyone.
Excellent. Thank you very much. Very, very insightful. We did have quite a few questions coming through for this panel. So what I'd ask is if you could just, if there are any pressing questions that weren't answered through the presentation, please use the time we have at the end to get those answered. Some really interesting points though. The Mike Tyson quote is one I've heard many times through the pandemic. And of course, the biggest test when you're punched in the face is really how you get back up. And I think the banking sector globally has really shown its resilience through that time. Now, and actually really looking forward to this next piece. So I will also add the sun has finally come up here in the UK. This is definitely one of the things that technology will never solve, because the sunshine we get here in the UK, if we're lucky, is about 10% of the sunshine you will get in Saudi Arabia. But of course, it's one of the things I love about Saudis. The weather is a lot better than the UK. But this next panel works really well, given some of the conversation we've just had. So thank you to Honey, Steve, Grant, Abdulaziz. Like I said, very insightful. But next, I'd like to invite Rajesh Makija. Rajesh, I hope I pronounced your name correctly there.
There you
Rajesh, oh, good, fantastic. Rajesh is the Chief Technology Officer and Senior Vice President at Intellect Global Transaction Banking. He's going to be presenting on a topic which is ever present here in the UK as well, and that's banking on the cloud. Myths, madness, or magic? Rajesh, over to you.
Thank you so much. I think somebody will have to enable me to share my screen. There you go. Can you see my screen good? Hi. If you can just confirm if you can see and hear me fine.
It's all up. It's coming through.
Excellent. Excellent. So very good morning, good afternoon to everyone. It's my pleasure and honor to talk about the cloud. I know the promises of cloud and cloud services in terms of performance, lowering of costs, elasticity, on demand, up and down, reliability, have been kind of gold rush. And banks globally have been investing a lot of efforts, time, and money in adopting these, at an organization level, enabling the digital journey. But I feel cloud should be just thought of as a means to an end, right? The end must be defined first. And what is the end? It's not just a cloud mandate. It should be a very well-defined cloud strategy. Strategy in terms of what are your business goals, what are your business outcomes, and then map the potential benefits, back to those goals. So we at Intellect, where I work as a CTO, right, are also on our progressive cloud journey. So, a lot of enterprise products which were built, 2 decades ago, a decade ago, have been on certain technologies, and cloud has really pushed us to think innovatively, think different. And banks are no different. They have a lot of products from enterprises like us. At the same time, they do a lot of build themselves because a lot of things are customized now. So what I'm going to share in this session is nothing but our learnings and experiences in the last 2 or 3 years of our own journey, where we have architected certain products ground up. And at the same time, when we have interacted with banks globally, what are some of the things which leaders and executives are looking for? So I've kind of distilled this into 3 topics. What are the myths, some pitfalls, anti-patterns you have to look for, and what are some of the success factors? Now, myths have been around in the cloud when they started off, and some of them have actually really continued. And some of these may really slow down and maybe impediments to your growth. So knowing what these myths are extremely will give you some clarity. So let me start off with the first myth. I call it M1. Is cloud just about cutting costs? Now, let me give an analogy. So when you are in a house which has, say, a metered, you have a water supply which is not metered, and you move to a metered water supply, what will tend to happen is you will probably end up paying a little more for the usage. In the case of cloud, they say, oh, there is no capex cost at the beginning, and there is cost as you go. If you take the same analogy, when you start using, right, you will realize that there are certain patterns, there are certain behaviors. Oh, I can save if I change certain habits. I think the same thing applies to cloud as well. While initially you may feel I'm not spending a lot of money, but you have to carefully optimize and assess as you go down the journey. Another aspect of the cost, which is a myth I feel, is cloud promises to use a lot of open source technologies. Even we have gone to the journey of open source. Yes, they are good. It doesn't make sense to reinvent the wheel, build something which is already available in the marketplace. But mind you, what institutions have to watch out for is, yes, some of the open source is free, but to use some of the premium features, you end up paying certain value or certain different version. And of course, you have to take care of the support costs as well, right? So in a bank, whenever you deploy any enterprise in the past, you've seen support is a very important aspect of it. So while the open source may be free, but you have to budget for the support costs. That's the second aspect. Another myth I think about the cloud is, don't think of it as just modernizing your IT. So moving your computing instead of having your own hardware, infrastructure, and services, moving to the cloud. I think the goal has to be more ambitious and more expansive. And that's where in the earlier session, it also touched upon, it's also drawing up a very clear strategy, a vision of how you want to address the cloud in the long term. I think that will really stretch your goals and really get you maximum benefit of the cloud, and just don't just consider it as another mechanism to cut your costs. Second myth which you've come across, is cloud only about technology? Yes, the public cloud, the CSPs have been introducing the latest and the greatest tech. Even we in a cloud journey, seem to be attracted by the shiny toys which are put up. But I think in our domain, in a complex domain, alas, it's very important to understand what is our problem statement and what technology fits best for our needs, our wants, right? Just taking the latest and greatest doesn't really add value. So if I take our examples, how does it improve our workflows? How do we improve our efficiencies and goals? We've established a well-defined evaluation criteria, for choosing the best technology of the cloud. I think financial institutions need to do the same. Is it scalable? Does it have the right documentation? Does it have the right amount of support, right? Does it have a large community? Does it really solve the problem that we're looking for? So if we embrace cloud, not just as a technology enabler, but how does it solve some of the commonplace problems? I think then the real value and we see is benefited. The third myth, which actually was historical, is cloud as secure as my data center? I think the myth still exists in a lot of financial cases, and we give regulations and compliance as one of the reasons. But mind you, what has happened in the last 2 or 3 years, that the public clouds, the CSPs, have invested a lot of effort, a lot of money in making the cloud secure. So it is not just infrastructure security. They have employed security experts, right? invested a lot in tools, technologies, reference architecture. So in our experience, when you have to deploy or architect in the cloud, they have defined very well security reference architectures, which you will adhere to, give you far, far more secure than some of the on-premise applications. So in my view, security is actually like a two-way street, right? While the provider gives you all the security and compliance, it is for you to figure out, how do I make sure that I am using what is provided in the correct manner, and then you can leverage maximum benefit out of the security of the cloud. So it's really and I think a lot of emphasis is now given. You must have heard of DevOps. It is DevSecOps. Can I have security built in my application lifecycle itself and not have it as, in the end as testing? And some of the practices, even we as service providers have embraced now, and not treat security at the last end of the spectrum, but factor it right at the architecture and design time. The fourth one, which we have come across very frequently, is, so there is a challenge in the cloud, right? You want to move quickly, you want to save cost, you want to get business benefits. However, you have these plethora of applications that we have. How can you move quickly? So one of the approaches that we've seen a lot of folks are trying to do is, can I do a lift and shift? Because the other one, moving or architecting to a modern cloud native microservices architecture, is a long-term strategy. But can I do a lift and shift? I think the challenge with that is, yes, you may deploy your existing monolith application or virtualize it and get some of the near-term benefits, but in a long term, in my view, it's a failed strategy. One, any of your application architecture, shortfalls are not addressed. You're not really able to leverage these beauty of the auto scaling, auto healing, auto performance management, unless you have really looked at our architecture and re-architected it. So yes, it will give you a very short-term benefit, but in the long term, maybe all your challenges that you had in your on-premise data center just get carried to the cloud if the application is not really resilient and it's suited to make use of the cloud technology. So in our journey as well, I'll share in a minute, we have taken a progressive approach. So we have architected some of our front-end products in the last couple of years on a cloud-native microservices stack. And for some of the enterprise products, we are taking a progressive modernization journey where we are not doing a lift and shift, but slowly refactoring the applications. We define it a cloud 1, cloud 2, cloud 3 strategies, where cloud 3 is a cloud-native stack and cloud 2 is somewhere in between, but it lets you leverage the modern tech stack in terms of containerization, runtime isolation, and so on. So having a cloud native strategy is a long-term, workable strategy, but a lift and shift will give you this false sense of, a quick win. But in my view, it actually doesn't really work well. So those were the 4 myths that I wanted to share. And let me move to the second one, which is some pitfalls which we have seen in terms of something which are anti-pattern, which we should watch out for, but there are solutions for it. Let me cover the first one. What I mean by cargo culting, and this is true for us as well as banks, right? We give examples of great customer experience by some of these, which is fine. But at times, what we also try and do is try to say, oh, they are doing daily deployments, weekly deployments. Should we get into that? They are using this latest and greatest, technology. Should we embrace that? In my view, the problems that we have in our financial services industry, right? The domain is complex. We have very, very important needs of transaction management, security, consistency. Some of these are very different from the problems that these internet companies and commerce companies are trying to solve. Yes, they have millions and millions of users to scale. They have to be extremely resilient, but we have our own share of problem statements. So by just blindly copying what is working for them in terms of just lifting the technology, in my view, doesn't work. We also have to understand their values, their culture, their way of working, and just copying certain aspects really is a failed strategy. So we can always learn from them. We can always set the benchmark high, but not just copy them. And I think in a lot of conversations, even in product organizations, we have seen, we give examples of these companies. But in my view, having worked in the financial services industry for close to 3 decades now, building enterprise products, yes, there is a lot to learn, but we should not copy. Integrations. it's like the elephant in the room, right? Enterprise integrations on-premise has been a big complex problem for us as providers and banks to solve. In the cloud, it becomes even more complex. What I mean by that is once you decide that I need to move a certain of my workload or applications up in the cloud, but we know the reality is in a bank, in a financial institution, there are a lot of heterogeneous integrations happening. It has to talk to a lot of upstream system, downstream systems, northbound, southbound, eastbound, westbound traffic. All of those landscape need to consider, because now when your data and your process moves from on-premise to the cloud, there has to be a very clean way of the two to integrate. So which application should move to the cloud has to be very carefully mapped out. So the solution to this is, yes, you need to have patterns. You need to find out what are your various patterns of integrations. And if you move a certain piece of workload or a certain set of application capabilities to the cloud, how would you attack that problem? And then it becomes a success factor. So it's a pitfall to watch out for, because in the hurry to move, you might end up overcomplicating it, and hence it may not leverage or give you the kind of results that you would have expected. The third pitfall is one size fits all. Now, when the cloud started, right, a lot of people just embraced and one size, you could just use it. Go to one service provider, go to certain service when it was infrastructure and a few bit of platform services, it was fine. However, in my experience, banks are used to tailoring and customizing not just the products, but also the contracts, the way in which they consume services. Whereas most of the public cloud providers, right, they have a very standard take it or leave it approach. They're not customizing it or they're not changing it. I'm not saying customizing is good, but the power and flexibility which the CIOs and the CXOs of the banks had, when they chose the software was far more in this. So here the solution is do your research. While there are a lot of technologies available, standardize on a few, just like you had database standards, J2E standards, middleware standards. I think in similar manner, the industry is consolidating. So have your standards, have your evaluation criteria, do your research. So when a product company approaches which has a cloud, you need to be sure what are the capabilities, what is the kind of support, what is the kind of upgrade. Because if you're not taking it as software as a service where the provider takes care of it, if you're going to manage the platform as a managed service, right, or put it on a cloud infrastructure, doing this research and deep dive of the vendor is extremely important, because that will not fit into your need. So you have to watch out for that. The third aspect is now, so what are some of the key success factors which we feel in our conversations, we've seen banks who've been on the journey, and even in our own experience, how has that helped us? So let me start off by saying that just like any other technology, you should embark on a progressive iterative journey and not a monolith project with just a date and move it. Because you have options. You have infrastructure, just the infrastructure which the cloud provider gives. You have platform components which are running on top of the infrastructure, or you have software as a service where you can take the capabilities. However, in your own landscape, you need to draw a big matrix and say, okay, which are the applications which are easy to migrate? Which are the applications which are not so easy to migrate? And which are the applications which are fine if they be on-premise? It really doesn't add value. And then draw some kind of a matrix of value versus complexity, and then draw the progressive journey. Now, here again, it is not just about technology. So you have your IT organizations who know the systems inside out, right? But they have to learn certain new skills in order for you to embrace the cloud. There are a lot of organization processes and culture that needs to change. Most of the companies that I spoke about in the cargo cult, they do agile. They iterate, they learn, fail fast is what they say, and then move ahead. I think we have to adopt a similar culture, which is what we've done in the last 2 years for some of the modern products. And banks have to embrace the same and demand vendors to see the output, and really tailor the journey. And I'll talk about partners. So first success factor I would say is embark on a progressive journey. Don't do just a lift and shift. So bite the elephant one bite at a time. That's the way. So the second one that I want to talk about is the success factor.
Sorry to interrupt, Rajesh. We're almost coming up to time, so we have a few minutes left.
Yeah, sure. I thought we started 5 minutes late. I'll just wrap it up in a couple of minutes. Yeah. So the first one is cloud skill sets. Now here, like I said, your IT organizations have been running your systems for years. But with the cloud, you need a new kind of skill set, which will understand these new technologies, connect the dots, figure out how the whole thing gets monitored and run, right? The second skill set is making the teams who build systems, who buy systems, and the ones who operate and run together. This is something we've adopted as a product organization, but I think the same thing is applicable to banks. And last is the procurement patterns. Some of the pricing models of cloud providers, of complex spot licenses, reserve licenses, on-demand licenses. So you need to really understand how you procure those. The third one is about org culture and processes. And there I'll straight away jump into what are the three things we're looking at. So adopt an agile mindset. I think traditionally banks have not spent so much of time on test automation and provisioning automation, right? With the cloud, where they say infrastructure is as a code, instead of taking the inefficient and chaotic, some of the things which takes weeks and months, you can automate all of that when you provision new hardware for your test environments. Or if you bought an enterprise system, which you're going to use for the next 3, 5, 8 years, investing in automation of the entire cycle will help you leverage cloud value quicker. And I think the last part of the success factor, which I wanted to cover, is the choice of partners. Here again, partners will let you plan, build, run, and optimize these new cloud technologies. Yes, you have enough skills. You can train them, but there are a lot of partners available. The AWS, so one is the cloud service partners, AWS, Azure, Google, but they also have their own, you can say, premier partner network, which are trained. Then you have cloud DevOps partners. So I think having the right set of partners initially while you make your journey in the cloud will be a far greater learning experience. And once you're self-sufficient, you can wean off the partners. So in summary, these were the myths, these are the pitfalls, and the success factors which I spoke about. So treat cloud not just as a delivery model, right? Treat it beyond economics, and it will enable you to innovate and be competitive, and not just focus on managing your infrastructure and platforms and applications really, but focus on the business. I think that's what I had in this quick session. Thank you so much. If there are any questions, I'll be happy to answer them.
Thank you.
I know I had a big complex topic to cover in like a 15 minutes. I thought I was kind of like a couple of minutes off the mark.
No, it's fine, and actually very insightful presentation, very relevant. We haven't had any questions come through on the chat, but for everyone that's logged on, of course we have the session at the end, so please do send those through for Rajesh, and we'll tackle those at the end of the session. But actually, we're moving into a very important part of the conference now, and actually, this is where these conferences really bring value, and it's actually in the opportunity to network, not just with your colleagues and your peers, but also our sponsors and partners. So I'd love you to all move to the sponsors and partners tab online now. You can also go to the networking zone and meet various industry experts. If you have any questions for Rajesh that are pressing, please reach out to Rajesh during this time. And then return back to the agenda tab and join the session again after 15 minutes. So I believe it's 11:25 Saudi time now. It's 8:25 here in the UK. So if you come back at 11:40, we'll be starting the next panel promptly. So thank you very much, and please network, please speak to our sponsors and partners. Thank you very much. So welcome back, everyone. I hope you had a good networking opportunity. Hope you made many contacts. By all means, like I said, this is one of the great things about events like this, is making the connections and meeting people who you may otherwise not get the opportunity to speak to. So we're going to start with the second half of the event. We have our next set of panelists who will be discussing, and this is a very interesting topic, discussing the role of AI in banking, the roadmap to transforming banks in the kingdom. Very hot topic. I'm sure not just in the Kingdom of Saudi Arabia, but also in many other regions worldwide. So the moderator of this panel is Aboud Ghanem. So Aboud, I hope I've pronounced your name correctly there. Aboud is the Vice President, Middle East Africa for Alteryx. So Aboud heads up the Middle East Africa business, joined Alteryx in 2014 to develop the markets outside of the UK and lead Alteryx's expansion in France, Germany, Benelux, and the Nordics. So Aboud, over to you.
Hi, Amit. Thanks for the intro. Can you hear me okay? Just do a quick check.
Yeah, coming through loud and clear. Yeah.
Great. Thank you. Thank you. And good morning. Assalamu alaikum and good afternoon, everyone. Really excited to, and it's also an honor to join you as a great leaders in the banking space. So we have half an hour, and the topic for today is, as Amit said, is about the AI in the banking, the kingdom, and the roadmap to transformation. We're going to be discussing use cases, some of the challenges, and also insights from your world, so that the audience can learn from your combined experience. I'm honored to join by obviously Mr. Ali Al Omran. He's the CIO, Chief Information Officer at Arab National Bank. We also have Dr. Amr Al Zaidi. He's Head of Digital Transformation Strategy at the Saudi Investment Bank. And of course, the one and only Amit Jagnorth, who's the Head of IT, Risk and Governance at Lloyds Banking Group, who you've seen quite a lot of today. But today he's joining us for this session as a panelist. I'm just going to hand over to you. Start with Mr. Ali, please. Just a quick intro of yourself, your role, and then we can move to Amr and Amit, and then I'll start with the first question, please.
Fine. I'm in charge of the technology sector at National Bank. So I have been in the business for almost 26 years. Focusing on banking solutions.
Great. Thank you for joining us today. Dr. Amr.
Salam rahmatullah barakatuh. Good morning, everyone. I'm Associated Professor in AI for Banking and Finance. As well, I'm heading the digital transformation strategy for the Saudi Investment Bank, been in the area of digitalization and technology for banking and finance for the last 10, 15 years.
Great, thank you. Amit, just briefly, if that's okay with you.
Yeah, sure. I'll just expand very briefly on my role at Lloyds. So I look at all matters to do with IT and cyber risk. And of course, data is a core component of that. And the topic we're about to talk about obviously has massive relevance to how we manage our data estate and govern our data estate. So that's my interest in this conversation.
Great, thank you, gentlemen. I must say we have the A team, so it's all A's on this course. Should be a great session. We hear quite a lot in the market. Obviously, everybody talks about the importance of AI, right? And especially now with the unfortunate events of the pandemic. Yet many organizations are seeking more insights around the use cases that are being driven, specifically around the banking sector, right? So I'd love to start with that, go deep dive into some example use cases that you're seeing happening in the marketplace, specifically in the kingdom. We'll start with Dr. Amr, please. Would love to hear your view on this, and maybe share some insights around the use cases that you're seeing that are quite relevant and also critical right now in the sector, please.
Thank you so much. I think, to be honest, AI has been in the market for a few years, and banking start to interact with this and try to attract some of the solutions to use cases in the area of AI. One of, to be honest, the promising areas currently, when most of the banks are exploring the areas of, virtual assistant, where you have the chatbot to answer questions, to relieve the call centers from unnecessary normal day questions. where we have an issue, to be honest, in Saudi, not even in Saudi, in all the Arabic countries where we have the NLP for the Arabic language is not as strong as the English language. So you still have solutions not that matured enough yet for the chatbots. Personalization and insight, that's one of the topics as well. You know, recent study being done is said we've done for 300, I think, 50 executives in banking. And they asked them, where do you see AI can help? And, you know, more than 30%, they said personalized insight. They believe this is the main area for them for the personalized insight. Because as you see now, a personal customer can shift from bank to bank easily and swiftly. He can open a bank within 2 minutes and he can shift all his payroll there. What's going to keep him with the bank is you have his history and you have his interaction and you have his all the data you have, and you give him personalized insight. So you become a bank that you know him. So he cannot shift to another bank that doesn't know him. So he will stick with the bank that he knows him. He knows my history. You know what I like, what I don't like. So personalized insight, I think one of the key issues. Product offering as well. That's one of the items to cross-sell smartly with a product that targeted a customer for their segment, for their area, for their size, for their income. ATM analysis. I'm not going to talk about the normal traditional where fraud detection, anti-money laundering, portfolio. This kind of robo-advisory. This has been in the market for a few years, and I think banks are using them, most of them using them. So to be honest, if I say number 1 and 2 is for the next 3 years, it's chatbot and personalized insight for the personal finance PFM. These two are the major things to be used for the next 3 to 5 years.
That's great insight. Thank you, Dr. I appreciate it. Sally, I'd love to hear your point of view, maybe sharing some examples if you can from Arab national banks, how you're looking to implement AI solutions, whether you do that already today or plans, and what are the most critical use cases, I would say, for your business today?
I think that interestingly, most of the use cases will be prediction models. So many banks, almost all of them, because of international Basel regulation, they had to develop things like a probability of default, loss-giving defaults for retail, and also for corporate things like IFRS 9. They brought to banks formal data science and machine learning techniques that we are not used to, that are probably pushing the maturity of financial institutions worldwide forward. And there are several examples of prediction models, like, for example, recommendation systems, generating leads to clients, and risk management and governance use cases, like, could this be a fraudulent transaction? So most of the use cases will be of the nature of prediction models. There will be categorization, classification models in the areas of customer segmentation. We in banking will have to shift from traditional kind of industrial age segmentation, where we segment 1 million or 2 customers into 2 or 3 categories. Males, females, government employees, others. This is very much limited. There is so much that can be done if we exit this stage. There is a third category that will be more challenging than others, which is associated with natural language understanding. That is the area of conversational interfaces. So we Arabic language speakers will struggle more than others because of lack of R&D in Arabic language. So though this is, there are many strong use cases for conversational interfaces in banking sector and other sectors locally.
Thanks, Ali. Great insights from you. Thank you. Amit, I know I'm just curious from your point of view of what we saw the discussion use case so far. Is that similar to what you're seeing in the UK, for example? And love to hear your point of view, Amit, please.
Absolutely. The predictive analytics piece is really key to our agenda, particularly as we go through there was a few questions earlier on legacy versus digital or new technologies. Actually, we're heavily dependent on a legacy estate. And if we were able to develop some predictive analytics around the legacy estate, prediction of IT incidents, prediction of weaknesses in our resilience posture, that would be really valuable. Likewise, in terms of the customer insight, I think that's that's certainly part of our vision. I think one of the challenges we have, our data estate is vast, absolutely vast, terabytes of data. A big challenge there is we don't necessarily have the structure around that. So whilst we have the use cases, we have the intention, we have the investment, the traction is actually quite challenging. So very similar in terms of the trend, in terms of the direction, in terms of the focus. We are regularly coming up against obstacles to overcome those, and that's before we consider regulation, which we several hoops we have to jump through there.
Yeah. Okay. Thanks, Amit. Which actually, this is a good transition into the, we want to talk about the challenges, because everybody agrees about the importance of AI, right, and predictive analytics use cases from the, the customer areas to from your area, like on security. The thing is, why is it not happening at scale? What is it that you're experiencing that I would say maybe if you can point out to maybe 3 top challenges that's stopping or maybe hindering the quick and fast adoption of AI in the banking sector? Let's just talk a bit more about it. We'll start with Ali, please. What's your view from a challenges point of view and what you see today?
I can think of 2. The first one is talent. Talent. So attracting and retaining talents, knowing that this is a scarce skill worldwide, not to mention locally. The second thing is having rational understanding about machine learning from business executives. So we'll have to isolate the machine learning from the science fiction shell that it got into it. So it should be recognized by business people as just plain statistical modeling. And then they will be able to recognize the various use cases and judge them rationally.
Great, thanks, Ali. It makes sense. I mean, I must say this is pretty much what I hear every day. Shortage in talent, and also how do you communicate and get executive buy-in, right? Because at the end of the day, you need to go and invest, especially right now. How are you going about the talent shortage, Ali? And given the fact on the other side, so we have a talent shortage, but at the same time, there's a pressing need to drive, AI and predictive use cases. How are you going about it today?
It happened that in Saudi Arabia in particular, and let me talk about my market. So there is a growing interest in data science among Saudis. At the same time, there is a special interest from public institutions with regards to raising a larger base of Saudi specialists. So there are multiple programs sponsored by different institutions that are geared towards raising talent in this field, which will help the market because this is a key differentiator for countries, states worldwide. And it's an area that we recognize with the right level of importance, and we are acting on it.
Great, thank you. That's so what you're saying here, enablement and upskilling is key, and that requires a combined efforts from the private sector and also to the public sector, government sector, and the institutions at country level to create that pool of, that you're looking for, the enabled or the skilled personnel that you're looking to hire for the future. Dr. Amer, what would you like to add to that from if you're looking at the kingdom today, Ali is talking about the shortage in talent. What do you see from your point of view as well? And I know as a professor, you probably maybe you can share some insight, what you're seeing, what's happening at universities, or maybe what should have happened, but what are your thoughts?
Yeah, to be honest, universities are sensing now the needs and the urgency for AI. Now we have kingdom-wide, there is only one department as called AI department under Computer Science College, which is a good start, to be honest, in that direction. You know, for most universities, the traditional departments are CS, IT, and IS, where we see now University of Jeddah starting an official independent department. It's called just AI department. So they just educate students once they get to the computer science school, just AI for 3 years. So this will create as well, you know, a pipeline of talent yearly going to the market. And I know from, you know, from friends and colleagues, other universities are doing the same, but not as independent department, because it takes time. They do it as just a specific program under the Computer Science College for AI. So hopefully within the next 2-3 years, we will see a pipeline of graduates specialized in AI, not just normal things. As well, in the University of Jeddah, there is another department, which is data science department. So you have two separate programs, one AI, one data science. And we always keep the sense that these graduates, they need to be linked to the market. Without the business domain, they will lack, you know, to deploy this knowledge and this expertise. If you heard recently, Saudi Arabia hosted the AI Summit, which was a big event, and which was organized by Sidaya. Their plan and their target to make Saudi Arabia is the center for AI. And the financial sector is one of them. They have an ambitious plan, which is really promising. They plan to train 20,000 within the next few years. So the 20,000 is just not just university students. They are targeting university students, research experts, private sector as well. So they are planning even to approach the private sector, banks, insurance, to give them specialized training related to the area of AI. So a boost is there, the push is there. Hopefully we'll get the feeling of the result within 2-3 years. You'll see the result where we have lots of expertise. For the other challenges, to be honest, I can see where is the using AI and deploying AI without, you know, the know-how and the knowledge and all these aspects to do it will create a black box of all these modules and algorithms that cannot be explained. I've came across one interesting case where they deployed for loan for personal financing. After a few years, they go back to analyze, they found there is a bias in the model itself and the algorithm itself for men than women in giving the loans, because they see them more, you know, income generating. And so it was hard to explain, it was hard to detect, and it was discovered, you know, a long time after being lots of loans being given. So these things are one of the challenges to keep track, monitor, and to report to, where to the authority, to SAMA, to all, you know, central banks, to give them justified, explainable, understandable justification why the algorithms give that decision. I think this is one of the, and data definitely is the major one. Sharing data, accessing data, that will be one of the biggest challenge.
Fantastic, yeah, thank you. Amit, I know obviously we're seeing a theme here, talent, skill set shortfall, right? And also at the same time, how can we move to more away from black box solutions, explainable AI, remove bias? From your point of view, I know typically other organizations and many people we speak to, I speak to also on a daily basis, talking about the data problem as well, right? Which we haven't touched on. But from your point of view, what else can you add when it comes to the challenges when driving AI projects or projects within the organization?
Sure. Well, I touched on it briefly, briefly in the introduction. So regulation for us. Yeah. So in the UK, we have to comply with something called the EU GDPR regulation, and unfortunately, the UK's exit from the EU makes no difference to that. It's still something we need to comply with. The challenge in the regulation is we have to be able to explain to customers how we came to a decision that we came up with. And of course, as has been touched on already, the black box nature of AI solutions makes that very difficult. And that's something we're having to really come to grips with. The other piece though, and it's almost, I absolutely agree with the talent comment. I'm not sure we're ready. There's a lot of cleanup, as I call it, work to do around that data estate. AI works brilliantly when you know where your data is, you know what it is, you know how it's structured. That's the first challenge. So there's a degree to which we need to be able to walk before we can run. And that in itself brings up a talent challenge. It brings up an investment challenge. It brings up an understanding challenge. One of the other factors within that, however, is I think there's a challenge around data ownership. So our data, as I'm sure with most organizations, it's federated across the organization. It's spread from one entity to another. And actually to be able to remediate that, to be able to get some structure around the data, you need to have good ownership. And actually, because it's so vast, it's very difficult to get single ownership of the data. So it's really a case of collective effort, which in an organization like Lloyd's, which is vast, it's huge. We have something like 80,000 staff, a number of senior leaders, several legal entities. That is actually quite a challenge for us. So in summary, I'd say we need to be able to walk before we can run, but walking is proving to be quite a challenge at the moment.
Great, thanks, Amit. Talking about the data challenges, it's also quite common. I guess for the panel here, feel free to jump in. I'd love to hear your thoughts on how are you actually addressing the data challenge, be it having the right data, making sure it's there, it's available, and also there is a shift towards collaboration between IT and the business, making data available and let the business do the analysis. The rise of the citizen data scientist, right? I'd love to hear your view on that. Maybe we'll start with Ali when it comes to, are you seeing this is the future, which is a citizen data scientist kind of approach where IT or the CIO office can make sure that we have the right data, all the data source we need in the right place, access to the right place? Where does governance come in when it comes to driving AI solutions or projects within the bank?
Back to what, adding to what Amit mentioned. So banks are recognized, should be recognized primarily as data vaults. Okay, probably more than cash vaults. So the debates of disruptive innovation and fintechs and where banks fit. So there are prophecies that one day will be pushed back in the food chain and will be cash vaults. So I believe that there is a greater value for banks in the economy being data vaults. And unlike other data vaults, so our data is not available to public. It will not be available to public. So because this is a fundamental element in the in trusting financial institutions. Okay. So it's the most secure data vault around, maybe. So the issue, though, is most of our data is not leveraged. We have so much data that I can write someone's bibliography before even he was born. If I got access to if his parents bank with me. So I can literally assemble the personal bibliography of a person, and I can judge his personal attributes, his lifestyle, his preferences, etc. So, and this involves, back to your question, tremendous effort of collecting, massaging, and organizing the data so to be available to data scientists for deriving the insights that Dr. Amr mentioned. There is so much insights that we can derive. So it's to assist customers manage their financials better, to protect customers, and to help to also assist in evolving the governance of financial institutions.
Mm-hmm. Great, thank you. I'm looking at the questions. We're also receiving questions here. It seems like there's a need to know more about results, right? If there's any specific results that you've achieved through any AI or predictive analytics project, use cases, maybe not necessarily in your bank, but things that you're seeing happening elsewhere or in the kingdom, would love to hear some thoughts around, we understand. So far we're talking about, okay, why is predictive important? What are the challenges? We're looking at personalization, for example. But do you feel, or can you share any further insights around specific maybe use case that was driven and the results that helped you even push this through the organization?
I've came across interesting case where it's predict the ATM location. So you set the ATM locations, you put the attributes, where it's multiple attributes about the street, the size of streets, the population in the area, and where is the nearest shopping center, the nearest shops, and it gives you predictions of how much you're going to generate money out of this ATM. Mm-hmm. So you just locate the ATM on the map and you put some parameters and give you straight away how much money. And as well, if you link it with your addresses of your customers, it will tell you how much customers around that, of your customer around that ATM, if you want to place it in that location. That's one of the cases I came across, which is interesting. The other one, which is I've seen, I think in China, which is the face recognition. They use it for the ATM, whereas you don't need to use the card anymore. So just the face recognition. Once you walk to award the ATM, to recognize your face, straight away it will ask you about your PIN code. You enter the other PIN code, then you withdraw the money and you walk away. So no need for cards anymore to use it. I think this one of the things that I hope we have matured, to be honest, chatbots and AI, because that will help us a lot, you know, with the data, with the call centers and all this kind of things. And I hope they're going to be more focused now in the NLP for Arabic language to have it matured. I think that the recent I've seen matured is Oracle and IBM. They are the two matured product I've seen. The problem with IBM is the infrastructure it's a costly infrastructure, and the cost with Oracle is the price model they use is just per conversation, if I'm not wrong. So you just say hi, they will count it. If you respond, they will count it. So that model is not, to be honest, makes sense to anyone to buy that solution. These, I think, the cases I came across. Bank of America is using very well the chatbot for financial, even it's going through the financial decisions and financial actions to do, which is very nice and very promising.
Great. Thank you, Dr. Amer. Amit, do you have any specific ROI examples or more use cases on that you want to share with the audience? Even doesn't have to be from the consumer side. You mentioned at the beginning, you know, predicting something related to cybersecurity, right? I'd love to know more from you if there's been any results kind of achieved, and just to help the audience who's asking about this actually right now, to know more about this, to motivate them maybe to push these use cases further.
Yeah, sure. That's a challenging question, because like I said, one of the challenges we have here in the UK is actually getting the traction to see some results in this space. The one I will touch on though is there's definitely been an uptick in understanding the capability that the tools we have in terms of what they can give us in terms of AI analytics. That I've seen there's a few questions around robotic process automation. That's certainly probably more the field that we're playing in at the moment. I'm not sure we've got quite the way to AI yet. Machine learning, of course. We've definitely seen the foresight that's taken, or rather the investment in strategic thinking up front when investing in a particular tool, to think about how we could utilize those for the purposes of RPA and predictive analytics. So particularly around our IT estate, where we want to do asset discovery, for example, or understand weaknesses in our IT or cyber resilience posture. Those processes have really helped accelerate that. So traditionally, we'd have had a group of auditors come in and a very manual process, tick sheet, and you know, I think we all know the limitations of that. It's a perspective, but in the IT world, things change so quickly. So an annual audit isn't necessarily going to tell you what problems you have for your next 12 months. Being more regular in your estate, being more regular in your ecosystem, and understanding where weaknesses start to appear is something that we've been able to do more effectively. I wouldn't say we've quite hit the end game yet, but we're definitely finding that the predictive analytics around our IT estate, weaknesses, support on systems, being able to get that forward view is something that means we can then go and address problems before they become a problem. So particularly in the risk space, we've seen a reduction in our risk exposure through RPA in particular.
Great, thank you for that, Amit. I know we're very short on time. I think we can probably, you all agree, we can talk all day about AI in the banking sector. We'll never finish. But just want to maybe go around with the final thoughts. If you fast forward maybe 3-5 years from now, right? What do you think would have changed, and where do you think the adoption of AI would be in the banking space, whether in the UK for you, Amit, or in the Kingdom? Ali, do you want to share your thoughts, please, on where do you think the future will be in the next 3 to 5 years? When we're having this conversation again, I hope in 5 years we'll do a review.
I think, let me start from where we ended earlier, but me and I think Dr. Amr giving examples of possible use cases. Let's build on that. Let's not repeat it. I think that we expect machine learning to increase the IQ of financial institutions. So customers would want to deal with smarter banks. By deriving the insights that Dr. Amr referred to. So we should not overdo it. Customers do not like overdoing machine learning as in giving customers too much of it. Okay, yeah. It has to be moderate and smartly done. And this should be kind of silent intelligence. So we should be, this will be the future of it. The point of interactions of banks will react smarter. So for the benefit of clients, for increasing the value derived from customers, for the improved safety of the customers, and again, for improved governance of a hyper regularized sector, which is bank.
Great, thank you. Thank you, Ali. I know we're pushed on time. I've been asked to take some of the questions, if that's okay, from the audience. I think that will be valuable for our audience. One question is more about maybe Dr. Amr, if you can help us here. What are the changes that will occur in the banking sector after the corona pandemic? And what do you think are the lessons learned from this, from what we've seen today? I think it's very relevant today. And feel free, anybody else, to jump in, because, I think, what are we learning from the corona pandemic and what's going to change is really key here. Dr. Amr, do you have anything to say here?
To be honest, I think banks, I'm talking about in Saudi Arabia, they know now that you don't only digitalize and automate the personal banking. Corporate banking is as important as personal banking because they've been comfort interacting with their relationship manager, doing with the relationship manager, all the interactions. During the pandemic, this interaction stopped. So corporate banking, they felt a bit, disconnected from the bank in some of the operational work, some of the other related work, which raised the flag for most banks. So I think there will be more work to be done in automation and digitalization related to the area of corporate banking. AI as well will play a part where we credit worthiness and, with all this assessment for the risk assessment for SMEs and startups, where banks, they don't have the huge team to review all these startups and evaluate if they are good or not good. It will be replaced by, an AI solution to at least filter the wave and give, the promising companies to go to the second round where the personal checkups can do. So that part, I think, will be definitely different, where they will be more focused on digitalizing corporate banking, A to Z, not just, the cash management product online that most banks, they do have. No, they will now work on end to end. Even, Sam, actively, because in the past, to open an account for a corporate, you need a lot of documentation to bring to the bank. Where straight away during the pandemics and before even the pandemic, when it even started, they allow more banks to open accounts online because they see the urgency. But in the past, it wasn't that, urgency wasn't there. But so I think the focus will be more on the corporate banking.
Thank you. Amit, what would you say, is going to be the biggest change as a result of COVID, in the banking sector, specifically around, be it the adoption of AI, automation, robotics, digital transformation. What do you see is pressing right now, and what's going to change as we exit, hopefully soon, the pandemic?
Yeah. No, and it's interesting, Dr. Ahmed, the point you just made, actually. It's the consciousness of our customers, be them retail or commercial. It's the change in the ways of working. You know, in the UK, we're certainly expecting to see more people work from home, which means it's less people in the office, less eyes on the estate, if you like, directly. And I think AI, robotics, machine learning will have a huge part to play in what I think will be quite an exponential leap forward in how we serve our customers. That one of the inspiring things, I think, globally that we've seen through the pandemic is the way banks have helped. And we traditionally, certainly in Europe and the UK, banks haven't had a great reputation. You know, we're seen as, I think the cash vault it's a great example, actually. We've been seen as the cash vault. Actually, we do serve a purpose. We do help keep businesses afloat. We do help keep customers liquid. I think AI and robotics has a huge part to play in that, because we will see a big shift in how we work as organizations. And just to touch on the earlier question you asked, yes, it's challenging, but I think it's one of those things where it's challenging, and then there's big success. And I think we'll be sitting in that space when we have this conversation in 5 years' time.
Yeah. One last question, I think, before we close off. We're seeing, you know, which I think we touched on slightly, is how do you get executive buy-in? Because we know right now there's a lot of scrutiny around spend, okay? How are you communicating value to the execs when it comes to, if you're asking for investments in AI platforms or other technology solutions around it, or even consulting? And what are you hearing even from the execs? Where do you think, you know, what can be done to help drive that, you know, value or communication, or even the story? You know, I hear like, you know, I was reading a CDO playbook, and it's all about, you know, how you can become a storyteller, right? What stories are you telling? Just tell us from your seat, what stories are working when it comes to driving executive buy-in, and how's the executive's view on, you know, spending on digital transformation or AI platforms today? Ali, can we start with you, please?
I think it's dependent on the current maturity level. So if it is, let us say, Netflix, then a refinement in recommendation system might not give it more than 1% improvement. But in our case, it's a green field. So the way we do our segmentation is very basic. The way we generate leads is also basic. So machine learning will not just bring machine learning advantage, it will bring proper methodologies for predicting certain events or so this can be easily achieved in a situation where the maturity of an organization is low. Setting the expectations also is needed. So there are recent studies say that these practices may not double sales, but they will have considerable contributions to reducing cost. So the area of fraud detection is also dependent on the organization. If we are talking about supervised learning, do we have labeled data sets of previous fraud incidents? So especially internal fraud. So many organizations don't. And therefore, this will be a challenge in applying there. So it's again the area of risk management, like whether that is retail or corporate, could be more matured and more demonstratable than several areas that we discussed.
Great, thank you. Unfortunately, we've ran over time, but again, it's a very valuable discussion. Thank you, the A team, for your contribution today. I really appreciate your time. It was an honor to host you and have a conversation with you. And I know there'll be an opportunity to answer more questions throughout the day through the different networking breaks, but for all the audience, thank you so much for your questions, for listening in, and for the panelists as well. Appreciate your time. Thank you so much, and enjoy the rest of your day. Assalamu alaikum.
Walaikum salam. Thank you, Aboud.
Thank you. Cheers.
Really interesting. I'll put my chairperson hat back on now, but very interesting. Lots of questions came through on that particular panel, so we will have some time at the end. We are overrunning slightly, but we'll endeavour to keep some time for questions at the end for all our speakers today who can answer some of these questions. But really great. The next conversation leads on very nicely, actually. So, and this is one of a particular interest of mine. So we're now going to go into the conversation of a new era of cyber threats for banks in the kingdom. And our moderator for this is Millie Gillen, Managing Director, Global Head of Client Experience at Standard Chartered Bank based in Singapore. Millie's actually a native New Yorker and Singapore transplant who has a wealth of knowledge about innovation and strategy and combines this with the use of data and design, thinking to reshape the client's experience and innovation. So Millie, you have the floor.
Thank you so much. Hi, everyone. I hope you're all staying safe and healthy. Whilst our attention is heavily focused on COVID-19, the world economy, and climate change, it's equally important to recognize that we are entering a new era of cyber threats for banks, especially in the kingdom. But why? More time at home means more work from home and more digital transactions, pushing criminals to discover new ways to target individuals and organizations. Did you know that coronavirus is blamed for 238% rise in attacks on banks? And 80% of firms worldwide have seen an increase in cyber attacks. And also 85% of the people posting puppy photos are trying to scam you. There's a cyber attack every 39 seconds. These statistics might be daunting, but don't worry. We're joined here today with experts in cybersecurity to help us understand what banks are doing and how they are functioning to try to protect themselves as well as their customers today and in the future. Let's take a moment to meet our panelists. Dr. Faisal Sibai is a seasoned cybersecurity professional with more than 21 years of experience in the cybersecurity community. Dr. Faisal has held many positions and comes with both local and international experiences with various big names around the world. He holds a Doctor of Philosophy and Masters in Information Security from George Mason University in Fairfax, Virginia. Amit Jugannath joins us from Lloyd's Banking Group as Head of IT Risk and Governance since 2019. Amit began his career in financial services in 1998 and has held a number of risk and compliance roles since. He settled in the work of information security and technology risk in 2007 when he joined Aviva, running several global security projects. In 2015, he joined Direct Line Insurance Group, where he was the head of IT and cyber risk in the first line, leading several transformation initiatives. Welcome, gentlemen.
Thank you very much.
So with our first question, what are the extra measures taken up by bankers to immune their infrastructure from cyber attacks in the middle of increasing digitalization?
Would you like to go over that, Millie?
Sure.
Okay. Okay, I was actually asking who do you want to go, but that's fine. I can actually go. So there are a lot of extra measures, and to be honest, the digital world has been changing a lot. So whatever we had 1 or 2 years ago is on the fast track of constant change. This is not just for the banks, because I have background in banking. I'm currently not in banking, but this is really across everything almost. And it really depends on which sector and which thing we're really talking about. So in general, the world, if we look at 2015, we're going to find that the threat actors have changed dramatically in the ways and the intentions they have been doing things. If we look 15 years ago or 10 years ago, they're quite developing. And with the increase of digitization around the globe and remote usage and remote work that's going on in the world, it's becoming a very big challenge to how to basically look at the next step from attackers. Now, what is the best step? Of course, is to basically try to up your game on cybersecurity, which is everyone's intention. But also, what does that really throw into the ball? You really don't know who you're dealing with. So one of the concepts that has been evolving for the past 2 years or 3 years, which is the zero trust concept. I think with what's going on today with COVID-19, with a lot of other things and developing threat actors in the way that they actually, and also nation state actors that we see a lot of, especially in the kingdom over here, you really have to consider looking at the bigger picture of how do I make sure that a person is really trusted or not? And we're reaching a pinnacle point in our, basically at this point of time where really there's no trust. So that's one of the things that I've been seeing across various organizations, talking to and interacting with various people, the zero trust concept. And I think that's the biggest measure, because once you really distrust people, your measures really, right now, you've just upped the game to basically think about, okay, so if I have no trust, that means I'm treating the person as if they're really not belonging to an organization. And I think that's one of the major things that a lot of organizations right now are looking for and I'm sure that banks as well. I think same thing would really apply down to possibly and potentially how to secure your access layers inside of the organization. People in the past used to just dump things and they all worked and integrated very well. Yet from a security point of view, you had all these different holes. And how do I now take things from not just the application level, but really dumb it down to the secure edge access? That's another thing that we've been looking at. Automation of services is another thing. People are trying to eliminate more of the human interaction when it comes to digitized services and more relying on how do we deal with, for example, and this is maybe very well known in the wild as SOAR, which is basically you have more of an automation, more of a basically orchestration model. So those are just some of the highlights. I'm sure that there's a lot of other things in the wild, but I mean, that's a very high level, a couple of things that basically some organizations are really paying more attention to.
Thank you. That's really fascinating. Amit?
Yeah, no, similar actually. So we increased our threat scanning. So for sure we saw increased threat. And I think that was certainly the first step we took. The next bit though is understanding what that means for the organization. So really running through our technology estate, looking for where there may be any opportunities for attackers to exploit us. I mean, the good news for us was actually our security posture was fairly strong pre-COVID, and actually the investments, it's a strange one in cybersecurity, right? Because if you have no problems, everyone thinks everything's okay. And actually when you do have problems, that's when the investment starts flowing through really rapidly. But this was great for us in a way, because it really enabled us to justify previous investments. We were able to show where increases in security posture over the last 5 years were really reaping benefits today due to the increased threat landscape. So it was really that communication. It's here's the increased threat. This is the risk to the bank. This is where this risk could be exploited. Here is where we've actually previously taken measures to mitigate that. The zero trust concept is one that we've been working to for many years. Actually, Dr. Faiz was absolutely correct. It's in many ways, you know, we like to trust in organizations. It's part of our culture, but actually in cybersecurity, not trusting is probably a good way to go. But really bringing that to the forefront, explaining to our board, to our executives, this is where you're reaping the rewards of previous investments, and actually then looking forward and go, what does this mean for the next 12 months, 18 months, 24 months? Of course, we've lived through a period where actually the uncertainty that COVID introduced was something that that was unknown. There would appear to be light at the end of the tunnel at the moment, but that's quite a recent thing. So really being close to that. The other bit I think we put more focus on is our insider threat. So, you know, we've had a number of staff now working from home. The environment is very different. You know, you're not in an office. Just being in an office physically actually introduces some security itself. So we put a lot more attention on that, just to really understand and track and monitor appropriately what's happening with our employees, and to try and mitigate the risk of an insider threat.
Interesting perspective. So as you know, I'm the global head of client experience, and now I'm seeing things from a very different light of start with zero trust. I just think that's a really fascinating and interesting way to address this. So the next question is, the new remote working structure, given more opportunities to scammers, what actions are taken by bankers to prevent this? Amit, I know you started to touch on this. Is there anything more that you wanted to add in terms of trying to balance maybe the scale of privacy, still preserving the privacy of our colleagues and employees, but at the same time still securing the bank?
Yeah, so we've always been quite reticent to go down a route of bring your own device. So I'm not sure how popular that is in Saudi Arabia, if I'm honest, but certainly in the UK, some people have been adopting that approach for many years, and our CISO was quite reticent to go down that route. And again, it's one of those decisions where, you know, before COVID, it may not have seemed logical, but actually during COVID, it was very it meant we were very, very safe. We've definitely appreciated a different working structure. So, for example, access to allowing people to print from home is not something we've done. We restricted the ability for people to work from abroad. And it's a tricky path to navigate, because you do want your staff to feel they're trusted. You know, they spend most of their time at work, they spend most of the time in your organization. But there's been a lot around communications and awareness. So, you know, I like to think of cyber risks in the structure of the cyber kill chain. And we've put a lot of emphasis on the reconnaissance part of that. What does it mean? What do you need to look out for? What does a phishing email look like? What are the things you really need to be aware of? We increase some security around sort of our email filters, but, you know, that, as everyone will know, it's effective to some extent. You need one email to come through and one person to click, and actually that does the job for you, or if you're a hacker, that does the job for you. But a big emphasis on raising awareness. This is the risk we face. It's different, not traditional. We're working remotely. These are the things you need to look out for. There are some restrictions. This is why those restrictions are in place. They're not in place because we don't trust you. They're in place because we want to mitigate anything happening to the bank through quite a sensitive period. So it comes down to essentially what's been dubbed the human firewall for us. So strengthening that human firewall, increasing awareness, increasing training, explaining why certain controls have been introduced that may, without explanation, seem like it's a trust issue. And like I said, all of that's come from that increased focus on the insider risk, which is very prevalent in banks in the UK. So it's something we've really raised our game on.
Thank you. Dr. Faisal?
Yeah, I mean, Amit actually stresses the point that I was actually going to originally talk about, which is basically the awareness. I think awareness is one of the key things when it comes to specifically scammers, because the problem is you can do all what you want to do inside of, from an information security or from a cybersecurity point of view, implement tons of controls and everything, and then you just need one person or employee to basically click on something that's wrong and it destroys everything. So I think upping the game of awareness is beyond important. I'll just try to stress on that. The other way actually to approach this is, since we already know that COVID-19 has introduced much more scammers, which is gamification, or trying to actually pull people into trying to, in just checking, how are they doing? The game that we have today in terms of remote usage of work and everything, I mean, Saudi Arabia is quite different when it comes to remote working, because government entities have almost gone into 100% going back into basically work mode from offices. I think there's a couple of other places from a private point of view. So yes, does it still exist? Yes, even if it's remote or non-remote, because most of the conferences or most of the meetings are still virtual. So people still do get virtual meetings. sometimes they even get them from people that they don't even know. And they say, should we accept this? We don't know. Is this part of our business or not? And I think gamification or basically trying to increase the awareness through phishing attacks and simulations really do help. And we've seen that really quite, it has changed a lot of things. The other thing, I think there is some sort of, I have to give credit to regulation point of view. It's very important for us to understand that a lot of countries also have introduced regulations. We were quite fortunate that the kingdom over here has introduced regulations since 2017, 2018, which actually puts this forward. It's no longer just to the entities to actually entertain this or not. And I think there is, people fear regulations and they don't like to abide by regulations, but there is the positive side that we came to COVID-19 pretty much prepared. By a lot of organizations, they already knew that they have to do phishing simulations, that the scammers are there. We get reports on how the threat actors outside of the country, basically nation state actors. So all of that has upped the game quite high, and it actually has done some pre-COVID-19. They put it at a certain point where a lot of this stuff has already either been resolved or is in the process of being resolved. So I have to give some credit to regulation as well from a government point of view. I think that quite helps. But yeah, I mean, awareness and gamification are quite high, or the highest actually when it comes to this.
Thank you.
Could I just add something to that? It's interesting. We've moved to the trust conversation really quickly, which is a massive driver. It's one of the things I found quite interesting. I was in Saudi Arabia recently, only a month ago, and I was at a friend's house, and he had an open Wi-Fi network. I was like, are you mad? It's like, well, don't have an open Wi-Fi network. Here's all the reasons you shouldn't have an open Wi-Fi network. And his response was, no one's going to do that. No one's going to try and hack my network. And I think potentially one of the challenges in Saudi Arabia is the culture there, the society there is actually quite trustworthy already. I wouldn't go into a stranger's house here and have a cup of tea. I would in Saudi Arabia. It's a very welcoming culture. It's a very welcoming society. But of course, the threat in Saudi Arabia typically is not necessarily within Saudi Arabia, it's outside of Saudi Arabia. And what I've certainly seen, certainly speaking to family and friends in the kingdom, is more of an awareness of that, more of an awareness of actually what's happening outside of Saudi Arabia that people should be wary of. So it's encouraging to hear the regulations, the new sort of drive, awareness, gamification, all kind of driving towards that. Like I said, socially, it's a very trusting culture, which is fantastic, and it's not something I hope it ever gets lost. It's very, very different to the UK, I can assure you. But I think that's part of the challenge. People don't immediately understand it because it's not their experience day to day.
Makes sense.
I think it's really interesting that you brought up the concept of gamification within the topic of cybersecurity, because oftentimes people think of gamification within banking as a way to engage clients and also to continue to build loyalty. So this is a really great way to give us another perspective of it's everywhere, it's out there. Just one last question before we open it up to the audience. What are some of the challenges faced by bankers while maintaining the safety of the organization? More so looking longer term. So, Amit, do you want to answer that first?
I think I touched on it already, that the strange thing about cybersecurity is if you're doing a good job, no one really notices. You won't have hacks, you won't have disruptions. And actually, those are all the signs of a good cybersecurity function. And then when you come to have but also we're dealing with a very dynamic threat landscape. Cyber threats are changing every day. Criminals, dare I say, are more advanced than organizations in understanding how to hack us. You're constantly having to invest to stay still in many ways. And I think communicating that through the organization, particularly to non-technical and non-security areas, is a big challenge. Because they go, well, nothing's happened. We haven't been breached. What's the problem? Everything must be working. And I'm sure that's that's a conversation I have regularly in the UK. I'm sure associates and peers across the Kingdom of Saudi Arabia are having similar conversations. So I think it's raising awareness of actually what cybersecurity means, what cybersecurity risk means, the challenge that we face that's external. It's not anything a bank can just command or control. I think that will continue to be the challenge. there continue to be challenges with legacy technology, emerging technology. What does it mean if you're in the cloud? What's the difference in the security posture there? I think there's more of an appetite to understand that from organizations because of the change it means to the business. But the bridge between business, IT, and security is one that I think will always need attention, always need care, will always need investment. And when you do a good job, it doesn't get noticed. And that's the biggest challenge, I think.
It sounds like a big part of your job is internal marketing and branding yourself, that yes, you need to constantly and continually invest in this, because the moment that you do, that's when the worst possible things can happen.
Absolutely.
Dr. Faisal?
Yeah, I mean, I completely agree with what he said. And the problem with marketing, just to dwell on that piece of marketing, you'll always find opposition. It's cybersecurity. Nobody likes it because it's hindering how you do your work. It's adding an extra layer of how you do things. What I always tell my team is, if you want to be successful, sell it right in an organization. Know how you're selling it. Know who you're dealing with. Give them the trust that you're really trying to do something that basically is helping them rather than making their life miserable. And that's why I always have said this even in previous conferences and everything, is that you really need to buy your internal client. You really need to buy them very well for them to understand. And it's not about convincing. Nobody is going to be convinced about cybersecurity. Everyone wants to make things much more easier than what they are basically doing. The question is, how do you sell it? How do you show them that you're really trying to do the right thing for them? And how do you really take them through the steps? Once you actually let that story play out very well, and you actually market it very well, you'll see no challenges. To be honest, I mean, when I came into my current job, I thought to myself, it's going to be a hell of, how do I change people's mentalities around what we're trying to do and what we do? But then if you take it gradually into baby steps and you let them understand that there are so many forces and there are so many things going on in the wild that we're here for you and not for us. It's really here to how we can put you on the right track. So, I mean, I always say, people say the weakest link is the people, but I always say something different is buy the people and you will have no problem inside of your organization.
Great, thank you. So we have a question. How do bad bots put open banking APIs at risk? And do banks require to increase infrastructure on security for cyber threats going forward? While banks increase the security, it becomes cumbersome for customers with too many security and controls and fear of attacks. And how do we balance this? Is there any way to simplify this? That's a really long question, if you need me to repeat.
I think it's better because I was cutting. If it's possible, just to repeat the question. For some reason, the picture was cutting.
Sure. The first part is, how do bad bots put open banking APIs at risk? Why don't I pause there for an answer, and then I'll go on. So
I'll answer that briefly. I think part of the challenge is we have an API estate through open banking that we don't necessarily know about. So I call them shadow APIs, and it's the unknown that's the concern. And actually, the part of the fact that I can't give you more of a robust answer than that is a symptom of actually what the problem might be. So it's an unknown. It's IT that we don't manage, we don't govern, we don't necessarily have insight into. You know, we haven't had any issues in that space to date, but the nature of it being unknown is the thing that worries us. So, you know, not having an issue, as we've just touched on, doesn't mean there isn't a risk there. And I think we're trying to get to grips with what that risk exposure might be. And that's the challenge.
Dr. Faisal, anything to add?
Yeah, I mean, it's a challenge. I agree with them. It's a challenge, but there are always ways where you can assess yourself, you know. You can conduct your own threat hunting, you conduct your own compromise assessment, and I'm not saying it's sometimes a tedious and tough job, but guess what? If you really want to reach a certain assurance level, and there isn't anything 100%, then you really need to put some time and effort. And that's why I'm a huge fan of red team versus blue team inside of organizations, because as what Amit said is, you sometimes don't know I mean, yeah, we all believe that we're in a safe condition, but we really don't know 100% or even 90% unless we do our own active measures to see do we have issues or not. So I do highly recommend that. In this day and age, it's very tough sometimes to basically say concretely we are fine unless you really up your game and basically try to do some more work from your side to see are we really there or not.
Great. So the next question, I'll try to summarize it as how do we balance the need for having an increased infrastructure for cybersecurity versus trying to overcome cumbersome processes and experiences for our customers? How do you find that balance, and is there a way to make it simple?
Yeah, I mean, I can from my experience, I'll talk a little bit about my experience. It's a challenge. It's a very hard challenge because the fact is any cybersecurity element that you're going to add has a cost. And this is something that we really cannot avoid. And I think the balance is bringing people on board. The previous thing that I actually talked about is bringing them on board to understand that whatever's happening is for the best. But at the same time, I have to say this because I've seen this in other organizations where they make it so complicated to the point where you really cannot almost do anything. And you really need to think that, yes, I'm trying to increase the cybersecurity element, but at the same time, do our security becomes really a risk bar where you really have to analyze and not just say, oh, because this is required because I believe in it as a cybersecurity practitioner, then it's needed. Well, do I really need it or not? You need to ask this follow-up question, and how much is this going to hinder the business or not? Is the value so much higher of the business that it eliminates the cybersecurity? So it's really depending on which situation. Some of the things you just have to, we need to accept it. We need to cover in 2020. We're no longer in 2000 or 2010. It's 2020. Threat actors are changing. But at the same time, some others we really have to reevaluate and see, do we really need to do it or not? I mean, that's my point on it.
One last question is percentage-wise, how much will banks spend on cybersecurity of a percentage of their overall budget? Maybe a range would help.
So I'm gonna answer that by partly answering the previous question as well. So, and it's a very biased answer here. Risk is a common language across IT, cybersecurity, and business. The business functions understand risk. They understand when you say this could impact your bottom line, this could impact your ability to serve customers. I have many bruises from previous roles where I've had to kind of manage that negotiation between business and cybersecurity and IT. But we haven't really touched on the IT department. The IT department can also be quite a challenging function as well when it comes to cybersecurity. My case is this: it costs loads more to fix than to design. And if cybersecurity is part of the design of IT solutions, if cybersecurity is part of the culture of an organization, it costs the business a lot less. And actually that the money for investment comes from the business. It comes from, when you're investing in cybersecurity remediation, you are taking money away from business growth projects, right? That's how all our organizations work. And the percentage question you asked, I saw a stat from Gartner not too long ago. I think it was roughly, I think at the time in Europe, it was about 8% of IT budgets were spent on IT, and it should have been more like 16%. So that's only half the investment was actually going into it. A lot of that investment is going to fixing stuff. Right? It's going into remediation. It's going into correcting mistakes from previous. Now, to some extent, you can justify that by saying those solutions were put in place before cybersecurity was such a concern. It's just really evolved over the last 10 years. But my simple answer to that is, look, it probably should be closer to 15, 16% of the IT budget. And that's a lot cheaper than it would be if you didn't invest and you had to go and fix in 5, 10 years time. You're talking about 20, 25% if you're in a remediation phase. So do it by design, justify investment, use your risk analysis, use your risk assessment, balance security risk with IT risk, with business risk. It becomes a lot cheaper in the long run.
Thank you. I know that we're out of time, but really quickly, in 30 seconds or less, Dr. Faisal, any last words, or if you wanted to answer the budget question?
I mean, on the budget question, I pretty much agree with Amit. I mean, that's around if you're in establishment mode, then usually it's a bit different, but over long term, that's pretty much it. I mean, in 30 seconds, I would say we really need to change our mentality around how we trust people. And it's no longer a world of let's trust people. I think we really need to transition quickly to the no trust concept. Our cybersecurity attacks will decrease with the no trust concept actually taking forward. I think that's one of the best ways that I've seen for myself. But yeah, I mean, I would keep that in the mind of people as the next big thing. Yeah. Thank you.
Amit, any last words really quickly?
No, I think I probably said it in my last answer actually. So, you know, this is important. It's a new type of battle we have to deal with, but it's a very real one. So be conscious of it. It's put it alongside all the sort of business challenges that we face day to day, customers, competitive market, all of those things. It's right up there. It can be alarmist, but it can make or break a business. And actually, if you manage it the right way, your posture is much stronger to deal with even things like a pandemic.
Thank you. Thank you both so much. This was so fascinating, and I hope comforting discussion for our audience about today and how banks are addressing cyber attacks and preparing for the future. I hope everybody stays safe and healthy and enjoy the rest of your summit.
Fantastic. So I'll put my chairperson hat back on. Millie, thank you. You already mentioned it, a fascinating topic, some great insight provided there from our panelists. So we're going to move on to now. We've got a Q&A session. We had quite a few questions come through. So I'm just going to check with our admin. Saba, do we have some of the other panelists? Have they joined us? Because I think we're still quite...
We have a few, Amit, and we are hoping that a couple of others can join as well. So with the ones that we have here right now, if you would like to take a few questions while we check on the rest.
Sure. Okay. So I've been sent the various questions that were asked. Let's have a look. What do we have here? There's quite a few questions actually. So what I'll do,
I think it's just you and Uni here, Amit. So yeah, I think we can take a few questions tomorrow by the end of the day once we have some more speakers. Okay. And yeah, we can close for the day then.
Okay, fantastic. Okay,
thank you.
Great. Well, look, thank you. Thank you to all our panelists, our speakers. Really, really insightful stuff. Thank you to all those participants. I can't see everyone, but I can see that several very high numbers have joined this conference. That's really, really great. Really groundbreaking discussion. I'd be amiss of me to not thank our sponsors. So I'm just going to go through the list of our sponsors here because actually they're the ones who make this possible. So big thank you to our platinum sponsor, Intellect IGTB, our titanium sponsor, Comarch, strategic analytics partner, Alteryx, our silver sponsor, AppsFlyer, and financial messaging partner, Swift, for making this event possible today, this morning, and helping us on our journey. Now, we will hold Q&A until tomorrow because I think we might have some issues with others joining. But please, you've got some time left now. Please go to our sponsors and partners sections on the website. Also go to Networking Zone. As I mentioned before, one of the greatest things you can take away from conferences like this is the ability to connect to people that you would not ordinarily be able to on a day-to-day basis. So, you know, we are competitors in some ways in banking, but we are colleagues and partners in terms of some of the challenges that we face, and actually learning from each other is one of the best things we can do in this day and age, particularly with the situations that we're dealing with, the circumstances we're dealing with today. Now, we're going to be kicking off tomorrow morning again at 10 a.m. KSA time, 7 a.m. UK time. So you'll see the sunrise in the UK again if you're joining tomorrow. Just one thing I'll add. So my wife saw me in the break, and first thing she said to me was oh, I thought you'd wear your tob. And for those who know me, you'll know that when I do go to Saudi Arabia, I love being a local, so I wear my tob. I go and do all the local things. So I promised I'd wear my tob tomorrow. So if you want to see me wear a tob, please join. But look, lots of interesting conversations will take place tomorrow. Really relevant conversations. I look forward to joining you then. Enjoy the networking session and engaging with our speakers and our partners. And salam alaikum, and I will see you tomorrow. Bukra, inshallah. Thank you. So Rohan, over to you for our closing statement.
What a wonderful day it is. You know, I've been absolutely mesmerized listening to all these amazing presentations and some fantastic views by our you know, panelists, our speakers. Thank you so much to all of you for your time. You know, we had a great learning experience. I'm sure people walked away with some amazing facts and figures shared during some of the panels and presentations. And I can see the questions asked by a lot of you know, our attendees, which kind of shows and testifies how interactive the session has been. So thank you so much to everybody for making this this day so successful. We would love to see you tomorrow, and we are here to welcome you. And if there's anything, please do let us know. We are the organizers of the summit. As Verve management, we are always here to help and assist you and ensuring that you guys have a worth of your time. Thank you so much. We'll see you tomorrow.